Hello, everyone. Today is Wednesday, April 23rd, 2025. This is episode 150. And Neil, thanks for joining me. I've got Neil Cantral here. We're going to talk about handling tariffs in Acumatica.
Hi, everyone.
And Neil, I thought you'd be a great one for this. I've touched landed costs a little bit in Acumatica, and I did in the last 24 hours. Typically, I don't do prep for these, but something like this, I need to put some demo data together, and I did come up with something. And so I'm curious to hear you poke fun at what I come up with, see what you think about it, just because we can't obviously show your company's data. But I thought you'd be a good one because your company actually imports a lot of stuff from China, right? So
yes,
thanks for taking time. I'm sure your calendar has been a little busier with all the tariff stuff lately. So thanks for taking the time to kind of share what you know about it and add some color to my somewhat very simplistic demo data.
Yeah.
Anything else? I was thinking we just launch right into Acumatica. We are doing this as a live broadcast, so I think we can do. Oh, check this out. We got actually Peter. I was gonna mention him and Nirav right off the bat. So thanks, Peter, for jumping in. You want to put any comments out there? We can highlight them and respond to them. Any other thoughts, Neil, before we just launch into Acumatica?
No, I'm happy to jump right in.
Awesome. I will. I'll thank. Let's see, Peter and Nirav. Where's my screen here? Let's do this. Over this. So here's my notes document. I'll put this in the episode link. Nirav and Peter did a similar type of a broadcast on tariffs. They go into a lot more detail about the tariffs themselves and like how tariffs work. We're kind of going to do, they also then sort of touch on the Acumatica part. We're going to do sort of the opposite. We're going to geek out more on the Acumatica part, but I think this is a good episode to look at. And Neil, I want to be respectful of your time today. I'm going to keep you for about an hour, then let you get back to work. But after you drop off, I was going to sort of round off some things that I've learned from this episode and just poking around the tariff website in general. I can do that at the end. So before I forget, let me drop this into the links. All right, so with that, let's jump into some demo data. Before I pull it up in Acumatica, I created 2 vendors. And you tell me, Neil, if this is about right. You got one vendor. I called it China. I tried to be clever with my names here. I called it China Car Parts or CCP for the actual vendor that we're buying from in China. And then for the tariffs, I got clever here, United States of Trump. I apologize as an American. I apologize to the rest of the world for the craziness of tariffs that we're all having to deal with. This is neither one of these are political commentary here. I'm trying to stay out of that fray. I was just trying to have fun with the names. But is that basically it from your perspective, Neil? Like it's just 2 vendors essentially that you're dealing with. One's the actual person you buy from, and one's whoever's laying, whether it's a broker or customs directly, whoever's layering in those tariffs on top of it.
Yeah. So you'll have your vendor that you're buying the item from. U.S. Customs is like who is the vendor that you'll be paying the duty to typically, or sometimes you might also have a broker, and then you might also have another vendor for like insurance or other fees as well.
Okay. Yeah, like your regular freight stuff. That's not really international specific.
Yep.
Okay. From a tariff perspective, though, it's typically for your company, it's one vendor for the tariff piece of it.
Yep, and then we'll pay that directly to customs.
Oh, yeah. So one thing I was wondering for you all, is there a broker involved, or you're somehow?
So there's still a broker involved.
A little more about your story. Yeah, how you guys do it.
Yeah, so I guess there's a couple different ways you can approach it. Sometimes a broker may handle everything on your behalf, or in our case, we have a broker who helps coordinate and gather all the documentation and support that we need. They help with all the filings and schedulings, and they provide us that information, but we end up getting entry summary from customs that then reflects the actual AP bill that we would have to pay, and is paid directly to customs.
Interesting. For some reason, I thought, and I know very little about this, but I thought that when a broker was involved, they would actually pay it on your behalf. Can that be the case? It's just
Yeah,
not
that
the case
can be the case. Yep.
Okay. So your broker is not as heavily involved as actually paying the customs fees for you.
That might also depend on the specific, like what port it's like leaving from, because we ship out of multiple countries or import from multiple countries, not just China. So that I'm a little hazy on the details.
Gotcha. Okay, that makes sense. And I will mention, so like as we go through this demo example, I will mention that you're actually using a container add-on from PC Bennett. So yep. I'm gonna push you to like try not to involve that yet. I do want to talk about that, but let's like just talk about regular Acumatica. But then we could talk about what that does for you after we get through this example. Mm-hmm. All right, so let's put this back up here. So then I also grabbed these right off your website. I don't know if they're good examples, but I just grabbed 5 items right off of the Wilmar website here. So like we could look at this one right here and see it on your website. And you all do, maybe tell us a little bit about what you do. It looks like you sell not auto parts, but stuff that helps.
Automotive tools and equipment. So pretty much anything you'd use to work on a car, whether you're like a DIY kind of person or if you're like an auto shop themselves, pretty much anything used to work on a car, and any of the accessories that help you out in the garage.
So if we flip over to Acumatica, we can see the 2 vendors. So let's grab. Oh, Ralph jumped on here. Thanks, Ralph. You save some of the broker fee when you pay the fees direct with CBP. You know what CBP is, Neil?
Customs and Border Protection, I believe.
Aha, okay. I'm high quality. Thanks, Toon. I think that's good. Okay, so we got our 2 vendors here. Here's the regular vendor, and all I did is I put in a vendor ID. I picked a product class or a vendor class of product because I thought it belonged in the product class. I put in account name, legal name, and that's it. I think that's all I did here. Nothing crazy at all. And then for the customs vendor, same thing. The only difference is I checked this box, and you got to make sure you check this box, otherwise it doesn't show up in the landed cost area. That's all I did, nothing fancy. Then for the items, we'll go over to stock items. So this one was a little bit more involved. I just took the descriptions off your website, created a separate item class called auto. I made everything average cost. And I think you did say, Neil, that you're doing average costing.
Correct.
I think that's more typical for a distributor. I think you start to see FIFO more when you're dealing with like more specialty stuff where you might be, it's a little more job shop mentality. But we can talk about FIFO a little bit later. Oh, what else we got in here? I did, I tried Googling to find some of the stuff to come up with a somewhat realistic price. And then I decided to make you like a super profitable company and make your cost only 20% of your price, which is probably not super realistic, but I assume, you don't have to comment, but I assume you're probably making less than 80% margins on your stuff.
I would love to make 80% margin.
But that's sort of the general approach that I took. And then I got real fancy and I attached pictures. And it's like if you click through, you can see here's the pictures off the website. We're dealing with pliers. We're dealing with some really cool looking lighted glasses.
Yeah.
And this is the biggest one. This would pick up an engine and drop it in a car, and some type of soldering. I think this is soldering material.
Yeah.
And then I did my very, very crude attempt to come up with the HTS code. So this is the part I can round off after you drop off, Neil, just to give what I've learned in the last 24 hours about how this works, which really was kicked off by Peter's comments on their episode. And then I also grabbed the percentage for that HTS code. So this is like the specific, I'm going to totally butcher this. Maybe Peter can give some better explanation, but to me, the HTS code is like the specific part of tariffs that applies to this specific item.
Yes.
And then that specific part has a percentage associated with it.
And it can also have an additional duty on top of the percentage. So there could also be something like an additional 10 cents per dozen imported.
I saw that. Yeah, it looks like it can get more complicated than this, but in general, you think it's safe to say in general, the bulk of it is the percentage?
Yes.
It reminded me of credit card fees a little bit. Like the bulk of what you pay in credit card fees is the percentage, but sometimes you'll have that like 30 cents per transaction or something like that.
Mm-hmm.
All right. So now to the part where I'd love to hear you make fun of this, because I don't know if this is the way to do it in the real world, but this is what I came up with. At first, I actually went with a tariff 01 and a tariff 99, because this is how I saw Narav do it. But I don't know. I wasn't sure. Like between these two, the only difference I was coming up with was the ID of the landed cost code. It would just be a way to capture a different bucket of stuff. And so I started thinking, well, maybe one way that you could do this in the real world was actually use the HTS codes to set up the landed cost codes. And so that's the example I'm going to run through. But Neil, what do you think about that first pass? Is that maybe a way to do it?
It's definitely a way to do it. It really just depends on what level of reporting and detail that you need for your operations. For us, we're not breaking them down by specific duty code, like in the landed cost code itself. We do enter the landed cost transactions by the individual duty codes. But for the landed cost code itself, we just have one that just says duty, freight, brokerage. We don't go that detail of. So it just depends, like kind of like item classes. How granular do you want to get? Because like the first, 5 or 6 codes up there, maybe you don't need to go into the subheadings there. You could just stop at the first 4 digits if you wanted to, because that would capture a general category of items. And maybe you don't need a separate subheading for each individual, like cutting tools made of steel, cutting tools made of aluminum. It can get too specific for most people's purposes.
After you drop off and I go through that PDF file, it's over 4,000 pages. So yeah,
that's a lot of landed cost codes.
I don't know how many pages are between 8511 and 9004, but it could be hundreds of pages just to get between those two codes. And I don't remember what it starts with. If it starts with 1,000 or something else.
Yeah, and so we didn't find the need, at least from the landed cost code. Like we didn't need to go any deeper than just knowing that, okay, this specific line item is duty. So that way we could categorize it. But with these latest additional tariffs, like you have on there, like the 9903 heading, those are like additional tariffs that are being like levied against like based off country origin in this case. And those are other specific tariffs that aren't necessarily like based off of the type of item, but it might be the type of materials it's made out of, like in our case, aluminum or steel, or this recent, like the reciprocal tariffs are also falling into that 9903 heading. And if you want to split that out for your own tracking purposes, that could be helpful to know that like, well, normally we only paid like the duties on just the item itself, but maybe these special reciprocal tariffs we want to track as a separate landed cost code, and that's something you could do here.
Yeah, that's one reason why I went this direction, and I agree with you. It's probably way too detailed, but that's where I noticed that extra 25% is sitting there in the 9903. But to your point, it could be accomplished with a much simpler version, which would be more like this, the regular and the extra part.
Mm-hmm.
Peter's got a couple comments. Let's see. It can be up to 7 different duties applicable at the moment. Oh, I didn't even realize that. Wow. Well, it doesn't surprise me. It's over 4,000 pages, that document. So yeah, it's not just about finding the one page. There could be multiple pages that apply. Yeah. What a headache.
Exactly. And like, so just the example that I showed you, there's like 5 or 6 tariff lines on there already. And there's probably going to be more after the 90 days, or who knows what's going to happen over the next few months.
And I will pull that example up. You sent me some great blacked out examples, blacking out the sensitive stuff. I love seeing real world stuff. Oh, I don't even know what this means, but okay. Yeah, it can get complicated.
Yes.
Oh, I interpret that. There's a lot of stuff.
So I vote for simplicity.
Yeah. Steel and aluminum, auto and auto parts, IEEPA, fentanyl, reciprocal, China, Venezuelan, additional. Interesting. Okay.
Yep, and you'll see like Peter's examples on that redacted example later.
All right, so I'm going to kick it off with doing a purchase order. And what I think I'm going to do here, I ran through this last night / early this morning. I'm going to just put this on my other monitor so I can just kind of at least go through a simple flow of it, and then let's geek out and tear this thing to pieces, basically.
Mm-hmm.
So let's do a brand new purchase order. So we're talking to our vendor in China, and we're placing a purchase order with the vendor, and we're going to order just a couple of things from them. We're going to get the spark plug gauge. Let's get 3 of those. And let's get 4 of the pliers. So pretty simple. And then what I'm also going to do is I'm going to kick off a spreadsheet here that, oh no, where is it? Give me a second. I came up with a spreadsheet to show the accounting side, because correct me if I'm wrong, Neil, a lot of this is really driven by the accountants. Is that right?
Yeah, I'd say so. Like, when do you take possession of the goods and how do you track that? And,
but just the fact that they want to track it in inventory rather than just taking the bill and coding it to some expense account, it's an accounting reason why you do that.
Mm-hmm.
And oh no, give me a second. I'll see if I can find it. I misplaced it. I had a nice looking Excel file. So hold on. Oh, here we go. Accounting entries. Come on. Come up. Here. Yeah, I thought it was in that folder. Oh, okay. Hold on. Bear with me. Sorry, I apologize. Here it is. This is what happens when you work on something in the wee hours of the morning. Okay. All right, I got it. Okay, so I've got this accounting spreadsheet where I must track, once we start having accounting impacts, I'm going to track the debits and credits of those, and we'll see how that flows through.
Okay.
All right, so back here, we got the purchase order, and let's go ahead and process this thing through. So we placed the PO with the vendor from China, and then especially it's coming over on a boat from China. So it's going to take a while. The next step, I'm curious in your world, Neil, what is that next step? Like, you get some type of notification to know that you need to receive something? Do you wait till it receives at your warehouse, or do you do a receipt when it lands at the port? How does that work?
Well, ours is a little different because we do use like that container module from PC Bennett. So we actually, what it's kind of doing behind the scenes is essentially like a two-step transfer. So we get notification that the goods are ready from our manufacturer. We take receipt of the goods once it's essentially like loaded onto the boat in the port. And then that basically what kicks off the process to start the first step of that transfer, to transfer the goods into a in-transit warehouse. So that way we're having costs on the books immediately, and then we can start tracking landed costs based off of that container.
Gotcha.
And then it's in transit, and then once it gets into the port, and that's when we can start like the next step of the transfer of when it gets delivered to our warehouse, receive it into the like actual warehouse from in transit to our main.
Is that because it becomes your responsibility as soon as it gets loaded on the boat in China? Like if something it gets destroyed, it's your problem, not someone else's problem?
Yep. So we take ownership of the goods pretty much as soon as it like hits the boat, essentially. And so we want to track that. Yes, this is our inventory, and we own it. And the duty implications are basically you basically pay what duties are effective on that specific date that it is boarded.
Okay. Looks like Aaron says they do the receipt when the goods are ready at the supplier. So same thing. It shows up as the asset. And so similar thing. They're just doing a manual two-step transfer. So you probably in the real world, not Tim's super simple in the last 24 hours with the demo data, but probably this warehouse. So let's say, Neil, we're not using the PC Bennett add-on, but this would probably be some type of in transit or on the water, you could call it, something like that. Yep. Warehouse, and you'd receive into that.
Yep. That way we can separate out the goods that are physically in our possession versus what's on the water. And so that way we don't allocate against it or try to do other inventory transactions.
Gotcha. Yeah, you're protecting it in a separate warehouse so it doesn't get sold, because you can't sell it when it's on the water. All right, so our trigger point, it sounds like in both Aaron's case and your case, Neil. Looks like Toon's got a question. Toon, I think we'll table that till we start talking about the PC Bennett piece.
Yeah.
After we talk about the regular Acumatica piece. But it sounds like in both cases, we're going to do the receipt when the stuff gets loaded on the boat in China at that port. That'll trigger our receipt. So I'll just do nothing fancy here. We'll just release that. And since I'm the accountant guy on this, I'll pick up the debits and credits. Super exciting debits and credits. Once that finishes processing. So we're on the purchase receipt. We have to jump over to the inventory receipt, separate document number. Just the way Acumatica does it. And then from there, you can hop into the journal entry. And here's where I can get out my trusty spreadsheet here. I'm going to keep things simple and just record the purchase receipt that kicked off those other two transactions. So I'll call it purchase receipt. And we can see here's our two different items. So we've got 4 lines total. We've got 2 lines for each inventory item. And we brought it into inventory, so it's debiting inventory. And it's crediting the purchase accrual account. So we'll do that and that. So at this point, we actually have cost in inventory, but we only have $19.71. We don't have any customs yet. And then we have $19.71 sitting on the purchase accrual side of things until we actually pay the bill.
Mm-hmm.
Okay, so that's in inventory. And we could actually run an inventory valuation report. We should be able to see that $19 on here. And there it is, $19.71 spread across 2 items. All right, good there. So then we have the landed cost document. So I'm curious in your environment, Neil, if we can, well, maybe not in your environment, but how you would envision someone doing it in without the container module.
Mm-hmm.
What would trigger then the entry of the landed cost transaction?
So your landed cost can come from a couple different sources, and it comes down to the timing of when you actually receive some of these bills, because they don't always arrive all at the same time, because some of them happen after the delivery of the goods. Sometimes you get them while they're still in the water. The timing's kind of all across the board depending on the specific transaction you're carrying. But as far as tariffs go, you can basically start entering that landed cost once you have that purchase receipt created.
And is that because you're reasonably sure what the percentage of the tariff is going to be, or because you actually have the document?
Because you should have the document by then. You should
Okay.
get an entry summary pretty quickly after it arrives at the port and has been released by customs, for you to be able to pick up the goods or coordinate.
So you're talking about a separate purchase receipt. You wouldn't have it at the time of the purchase receipt that we just did, because that would be into the on the water warehouse. You're talking about when you're then doing a transfer of the goods from on the water to
so that's where
city. It's not even, it's almost like 3 warehouses, isn't it? You've got the Wilmar warehouse, wherever that is in Kent, Washington. There's another warehouse, like it's in America, but not yet at Wilmar, right? Is it 3?
Yeah, so it's essentially like the port. The port will kind of have their own customs will basically inspect and clear your goods for pickup essentially, and that's when it generates that bill.
So the port in Seattle.
Mm-hmm.
Okay. So you do another receipt into the port in Seattle, into that warehouse.
We don't actually do a receipt there.
What's that?
For us, we don't do that. It's basically we just kind of it's in transit even when it hits the port, and then we receive it once it's finally delivered to our door. So that's where,
because of the PC Bennett add-on that you.
Yeah, so that add-on allows us to attach landed cost before that destination transfer occurs. So that destination transfer would be us receiving the goods into our warehouse. Okay. And that's where you would you'd be adding your landed costs, documents, to that final receipt of bringing it into your inventory.
And it sounds like, well, even in this case, without the PC Bennett module, I could do a on the water warehouse. I could then have a Seattle port warehouse, and I could put the landed costs on it at any point in time, can I? As long as it's in inventory somewhere.
As long as you have a purchase receipt. As long as you have a purchase receipt, you can start adding that landed cost. But the timing wise, I think I would recommend doing it just at the destination receipt.
Okay. Gotcha. But I guess part of what I was driving at is you're letting the document itself drive the entry of that transaction into Acumatica.
Correct. So let's say we get the bill for duty, the same day that we receive the goods. That's not a problem. But let's say your freight bill doesn't come in for a week or 2 after you already received the goods. So you'd still apply that back to that destination receipt, but there could be a lag time before you receive all the bills to allocate the cost.
Yeah, I'll just focus on tariffs, not the freight piece. But yeah, so if I do the tariff piece, I'd get it from customs. So here's my customs vendor. And it sounds like one thing I was wondering is there really two separate things that trigger, one, the landed cost transaction, and then second, the AP bill? It sounds like there's not in your case. It's just one thing, right?
Right.
So probably what you would do is you would have this default to checked, which you can do. Well, here, let me just do that. Let me go fix that. My demo environment, there is a setting here. Here. I think it's that one. Let's see what happens. When I refresh this. Yeah, this just saves me a click. So this automatically checks. So I'd be sitting here with an AP bill, but instead of entering it into the accounts payable bills and adjustment screen, I would put it here by invoice number like this.
Yes.
Okay. So even though Acumatica is going to create two different documents, one is going to be this. Oh, well, let me save it. It will be whatever number this gets, and then it's going to create another one with the AP bill. To you, that's just one thing. There's no reason to have two different ones.
Yeah. It's just the visibility that it ultimately ends up creating.
Okay, perfect. All right, so then next, let me pull up Tim's rudimentary example. I need to pick up my pace here. Sorry, so we can get to the reporting side. I think that's where this is going to get more fun. Not that it's not fun already, but even more fun. All right, so here's where I'm tracking. So I'm real curious to get your thoughts on. Let me just populate this and then let's see what you think about this. I was then looking at, okay, we got two different items going on here. And actually, I really should. Do you normally populate this first and then come in and populate this? I feel like these two tabs maybe should be reversed.
It's a good question.
Or doesn't matter to you?
I don't often do the main. I think you probably do details first, because if you wanted to associate a specific item to a landed cost like line.
That's exactly what I found myself doing. Yeah. So for me, I almost feel like details should be the first tab. So you click on this, you associate the purchase receipt. And even though a lot of times you're not going to have a receipt number, right? So do you get PO number in here?
You would have a receipt number at this point.
But like you're not going to have on your paperwork a receipt number, because that's just an internal Acumatica number. You're probably going to look it up by PO, right?
Oh, right.
So it's probably going to be this vendor ref. You look it up on PO. But you would select that transaction. So this is the purchase receipt that we just did for quantity 4, quantity 3. I don't know why it added them in opposite order, but now that we've done that, now we come over here. And what I found myself wanting to do is because I had associated for every item that tariff code, because I got super duper specific, I found myself wanting to associate the code directly to the item. And you just kind of alluded to this. Do you find yourself doing that, or your company does that most of the time? Or...
We do have that as reference. We don't use it in the actual landed cost process itself. It's mostly, we have that as a reference thing for our purchasing team and our sales team, so that they know, like, they have tools to estimate the landed cost.
Oh, by reference, you mean the item number or this HTS code down here?
The HTS code. So we have the code there, and then the percentage there. We do have that as an attribute. That.
Oh, you do? Oh, interesting. You do it just like this, or similar?
We customize it, yeah, to throw in a field for that. But that's just for a reference for our team, so that they can kind of estimate what they think it'll be.
So that's interesting that you wound up doing it. Okay, so it sounds like this isn't super crazy having it stored on the item.
It is incomplete. recently, and with all of these new tariffs, like because we have the stacking, the 20, the 25, now the additional, X%.
Yeah.
So
That
this
extra
is too
25%.
simplistic, but we have other tools that we use outside of Acumatica to help us calculate all of those additional tariffs. But the item specific one we do store here.
Or as Peter pointed out, like the layers and layers of multiple things going on, 7 different ones. Yeah, it's simplistic, but it's a good starting point. And what I'm curious about here is this 2.5%. This, right? And so one thing I found kind of funny is we basically know about what should be getting charged depending on what the items are on the document, right?
Mm-hmm.
So if you're storing that in stock items, are you somehow auto-populating this landed costs area with some type of customization?
No. So we wait till we get the exact bill from customs before we start adding any of the actual detail on here. Just because that's ultimately customs is the one who's deciding how much we're paying for it. So we might disagree, or maybe we misclassified something, or we missed a tariff code that applied to an item. So that's why we always wait for the bill before we add it here.
Okay. Ralph and Jeremy are pointing out we could have done it directly on the purchase receipt. Oh, I totally missed that.
Yeah. So you can add it directly to the purchase receipt, which is nice.
Is that a better place to do it? Should I do that instead?
Our process kind of aligns with that more.
I guess it's too late though, because I released it, isn't it?
No, you can continue to add landed costs after it's released.
So here's my purchase receipt. That does make more sense to me. So then ellipsis here. Oh, okay. So this is just a quick way to get me to the same place, landed costs.
Well, I think you can add it before it's released. Yeah, so I think once it's released, I think you have to do it through the landed cost screen versus that tab.
I'm curious, Ralph, what you meant by ellipsis, if you meant this right here. I assume that's.
Oh, wait, no, yeah. So, sorry, you do have to add it directly from the landed cost screen. It's just how you get there is different.
Got it. Yeah, I was thinking maybe there was something. I was trying to find something on this tab here. I think this is just, it's going to show up once I enter it in the landed cost screen. Okay, so I'll go back to this. So I guess if I hadn't released that yet, that would have populated this for me.
I think you selected a different vendor for you.
Oh, thank you.
Okay, so when you do it through the ellipses, it looks like it auto adds it to the detail section.
Ah, yes. Okay. So it was there. I just didn't. I wonder why I had to pick the vendor. That's interesting. I guess because I don't know. It knows the receipt. It doesn't know if I'm about to add freight or etc. Okay. And yeah, so that's true. So Ralph's right. You can add it like we're doing right now after it's released. Okay.
Yes.
So it auto-populated that. I like that. That is a better flow. That was kind of clunky coming into here, etc. All right. So then I have my landed cost codes. And here's where I was thinking, if you're storing this on the items, you would just auto-populate these with some type of workflow customization. And here's where I found myself. So when I was wondering, when you were talking about referencing, this was the specific one. You mentioned sometimes you associate it to an item. Do you know if that's most of the time or no?
A duty we always associate to an item.
Really interesting. So anything customs related, you associate to an item.
Yeah, because it's always item specific.
That's what it seemed like to me. That makes sense. Okay. So if I don't put anything in this inventory ID field, then if you look at the details, it's going to take the 24 cents in this case, and you'll see it's actually spreading it out across both items. And the way it does that is according to what you've set up on the landed cost code, which
so that allocation method right there. Yep.
What would that? There's 851111, 851111. So yeah, I've allocated it by cost. So it's using something to spread it out. But I guess you're saying in your experience for custom specifically, it just doesn't make sense to do that. Associate it to a specific item always.
Mm-hmm.
Perfect. That makes sense.
Things like freight, you might not want to associate to a specific item.
That makes total sense. Yeah, because you're just paying one freight bill for a bunch of stuff. You don't have a breakdown by item.
Mm-hmm.
Okay, got it. Oh, okay. So if I should have saved this first. If I put the item in here and I go back here, now that allocated amount, it puts all 24 cents on that first item.
Mm-hmm.
And then we'll do the second one.
And so, like, let's say if you did track multiple like duty charges, like the year 9903 header, you could have multiple lines referencing the same item number, and it'll roll it all up and allocate it appropriately.
I did notice that. Okay, so actually that's a perfect example to do it. So let's do this one. This was another thing. I feel like it'd be better workflow if I could just put in a percentage and then modify the amount. Although I guess you're getting the amount on the bill from customs, aren't you?
Yeah.
The actual amount.
And you probably would only want to allocate exactly what customs is charging you. Like maybe they did different rounding, or maybe there's additional tariffs on top of percentages.
I think it's a good timing to pull up that bill that you sent me. This is great. So this is an actual bill with a bunch of sensitive stuff blacked out. Maybe you could walk us through this. What are we looking at here?
Yeah, so this is the entry summary. So this actually has the detail of what exactly is customs charging you and the breakdown by item on a specific container.
So if I scroll down here, here's that 9903 that we were talking about, and there's that 25%. Mm-hmm. How do I know what specific item that 9903 is associated with?
So unfortunately, I blacked that out. That's in that
right here
middle section, I believe.
Okay.
Yeah. So that's where it like lists the specific item or the description of it.
And then you just know that everything kind of underneath that item is all related to that one item.
Yeah. So like so on the left-hand side, there'll be the line number 001. So I know there'll be like a dash across the line, and then it'll go to 002. So everything is
for each
section.
New item.
Yep. So these are the individual lines for that specific item.
Yes, this goes back to Peter's point, or Pete's point. There's 1, 2, 3, 4. He mentioned 7 things. Here we already have an example of 4 different charges for one item.
Yeah. So in this case, this is I believe it was a spark plug gap gauge. So we have the original 25 and then the 20% tariff for things originating from China. So from the first term, that third line, that 9903, that reciprocal 10%, they changed the description on the second page where basically it's showing that it's exempt because of the shipped before I think it was like April 5th deadline or something like that.
Is that why this is empty right here?
Yep. So there's no charge on that one because it was on the ship before that tariff went into play.
But if it had shipped after, I saw that in the document. It's like everything's defined in Eastern time, which I thought was interesting. That's where Washington, D.C. is. So I guess that makes sense. But it was like, midnight on a certain date. If it shipped before or after, that's what would determine whether this kicks in or not.
Yep.
And if it did kick in, sorry, go ahead.
Yeah. So if it did kick in, you would see 10% right there.
So if it did kick in, you would now have 55% extra tariff that you did not have, let's say, a year ago. Is that right?
Yep.
Wow. It's crazy
the 20
to see it
and 25
in black
were
and
already
white.
in place.
What's that?
The 20 and 25% were already in place from the previous term.
So even a year ago, the 25 and the 20% were already in place?
Oh, no, sorry. I'm mixing that up with the steel tariffs. Sorry. Been looking at too many customs documents. So yeah, so those are new. We're a
Wow.
couple layers deep on tariffs now, so I'm getting a little bit confused.
Well, yeah, and here's where we're getting really out of our element, right? But I mean, needless to say, it's crazy to see it in black and white. These are pretty big numbers here.
Yeah. And so who knows when the next, it'll be interesting to see these documents after, for the stuff that shipped after like early April.
Crazy.
So the next few weeks, these bills will get interesting. So those first three lines, yep, are those like special levies, like from the section 301, I believe it is, of the like tariff guide. So then that fourth line is the actual item tariff itself. So that 9017, that 3.9% is what's associated with that specific item type.
Right. Okay. So yeah, this, but even though that's a 9 section, I was expecting to see something less than a 9.
Yeah. So
it just
I have no
happens to
idea
be
how
in
they
the 9s.
organize
The
it.
99s
Yeah.
are the ones that are like for everything, but a lot of times this could be starting with an 8 or 7, right? For a specific item.
Exactly.
And this is more sane and typical 3.9%.
Yep. So this is very standard. Most of our stuff is kind of floating around that percentage.
Got it. Okay.
Without the additional stuff added in. So
So
then
with
we have
all these layers, sorry, go ahead.
Oh, and then just those next two lines is the merchant harbor fees. So those are additional fees that we also have separate landed cost codes for.
Oh, okay.
Just so that we can keep that separate from any duties. So we can do some reporting on what's duty, what's freight, what's just harbor stuff.
Do you do do these fluctuate that much, or probably not that much? They're pretty small.
They're very static.
Okay. Well, I think for the sake of time here, since I spent way too much time burning through Tim's crude examples, why don't we really look at things from the reporting side? I think my whole accounting thing, I don't know, maybe I'll round that out after you need to drop off. Do you have a hard stop, by the way, in about 10 minutes? You go over a little bit?
Going. Yeah.
I'll take as much of your time as you're willing to contribute. Thank you, by the way. But I think, kind of starting to put on our reporting glasses here, right? We want to track multiple layers. And part of the reason is we want to get an idea of how much of this is due to this extra 25 and this extra 20, right? Yeah. So to the point you were making earlier, I could jump right in here and throw a line for the 9903. I'm in my maybe it's not this granular, right? Maybe you just call it Trump tariff or something, but I can put an extra line in here and I can put the same landed cost code multiple times and associate it with each item, right?
Yeah.
So how would I see? Here's where the percentage gets weird for me. I guess normally, to your point, you would just get that right on the document. So right here, I think this section on the right is where
that's the actual dollar value.
Okay.
Assessed.
So to your point, rounding, you don't have to worry about calculating the percentage. It's just staring you in the face right here. You just type in the dollar amount.
Mm-hmm.
It's only annoying for me in my demo world because to try to be realistic, I want to take $7.71 and calculate 25%. So I'm going to put 193 right here. Then I'm going to do the same thing. Normally it'd be staring me in the face on the document, but I need to come up with something realistic. $3 for this. And so it'll let me put the same landed cost code in multiple times. Perfect.
Mm-hmm.
All right. So now I've wound up with $5.76 of tariffs on less than $20 worth of goods. Oh, wow. I shouldn't be laughing. This is painful. But I've got something here, right? And then we already established we would check this bill. So even though we've got a document that's LC206, in your world, you're thinking of this and the next piece, which will happen, I think, as soon as we release this. Let's find out. So we're on the landed cost screen with LC206. Let's see if that takes me. If it takes us right to the bill screen, we'll find out.
I don't remember if it does or not.
I'm on my local laptop, so it runs a little slow. Just give that a moment. I think it shows up here. Yeah, so it looks like it created the bill. It did two things, the bill and the adjustment.
Mm-hmm.
I won't geek out. I'll probably back into the accounting side once you get bored here. I'll hang out here for another hour at least. I could round that off. Oh yeah, it looks like it did release it. So that probably is because it automatically released it. It's probably because I had that setting turned on here.
Yeah.
So it both created the bill because of the checkbox, and then it automatically released it as well. Okay, cool. So yeah, again, in your world, this 206 document and this 5561 AP document, like you think of it as just one thing, right? There's no reason to have two different documents for you.
Yeah. Yeah, for us, for the most part, because it is nice because, yeah, no, I won't get into it, but yes, it is the same thing for us.
I did notice that this doesn't carry over, and I guess that makes sense. Well, I kind of think this could carry over because this information is coming off of the landed cost tab. And didn't I put that? Yeah, I did associate inventory ID to those lines. So I think it would be nice if that carried through. Maybe that could be a feature request at some point. Does that matter to you at all? Or we don't care once we're in the accounts payable world?
Like, I don't care when it's on the AP side. It does show up on the inventory document, though. And that's
you do care about it. Yeah, that makes sense. So you care about it on the inventory side, which was this one, right?
Yep.
So I won't list the debits and credits, but if we look at the adjustment, this is what's actually increasing inventory by 24 cents. That was it. Oh, for this one item, 24 cents.
Mm-hmm.
What did I miss here? It did do two separate transactions. So it did three.
Yep.
Four separate transactions. Okay. So it's increasing inventory. What did I have? About $5, 24 cents, 59, 193, $3. Okay. So we're in the $5 neighborhood. And it's also passing it all the way through to the journal entry, I think, the item ID. Let's make sure. Okay, good. So it shows up all the way into the general ledger on the inventory side. All right, I like that. So at the end of the day, if we come back to that inventory valuation report, we were at $19.71, but we added, if I refresh this, about $5. We're now at $25.47.
Mm-hmm.
I think we rounded out landed costs. Before we geek out on reporting, I did want to point out one more thing, which is, let's go ahead and sell this thing. To me, this is a big reason why the whole thing matters. Because I did look at, there's two things that could happen. And tell me, Neil, if this happens in your world. One is you add the tariffs to the inventory while it's still in inventory. The second thing is you add the tariffs after you've sold it. Does that ever happen for you? Or maybe more often?
It could.
Right.
Yeah, it could. There's a chance it could. Typically, there's enough lag time between us like getting the can pulled up to the door and it actually getting put away into the rack. That kind of protects us from that. So there's a little bit of a lag time there.
It's probably more likely to happen though with freight, right? You said that bill could come weeks later.
Yeah, so that's there is that risk. So you could get like some kind of might get an inflated like average cost like down the road that you didn't capture, like if something was sold pretty immediately after being received.
So I did want to point out on that note that if you If you catch it before you sold it, which we did in this case, then the inventory adjustment increases inventory, and then it goes into this landed cost accrual. Wait, no, that's not the one I wanted. Where's the one I wanted? Okay, yeah, it goes in the landed cost accrual, and then now that's an inventory. When I sell it, it's going to go to cost of goods sold. So actually, let's sell it. I'm going to sell it to first customer on my list, and let's sell both of these things. Know what I called it? What did I miss here? TRFF. Oh, I need to use, I'm trying to do a shortcut, so I'm going to use the invoice in the sales orders module.
Yeah, SO invoice.
I'll put a stock item on the receivables invoice one. My bad. Realistically, you'd have a sales order, but I'm just cheating and taking a shortcut. So 3 of the first one. And 4 of the second one. Okay, so this will relieve inventory for us. Here's the inventory document. And what I wanted to point out, again, on the accounting side is when it hits the general ledger, it's going to hit 5,000 cost of goods sold. So if you're looking at your profit and loss statement from an accounting standpoint, profit and loss, and we run this, cost of goods sold is going to land here. And so the whole key to me for a lot of this is what they call above the line or below the line. I'm curious. I have not been monitoring the comments. But if anyone has any thoughts on above the line, below the line, I think part of why this matters, and here's the line. When I say above the line or below the line is this right here. This is the line, gross profit. So when you say above the line on the financial statement, you're talking about stuff that's above gross profit. Below the line is below gross profit. So by getting the cost into inventory before we sold it, when it gets sold, it lands in cost of goods sold right here. If we had just taken the customs bill and coded it to some general operating expense, it would land below the line down here. And we'd have another code for tariffs or something like that. The reason why that matters, I think, and here's why I'd love to hear some comments on this, but why I think that matters is things like bank loans, especially in a private company. If you're publicly held, it matters even more because the stock market is looking at lots of KPIs that includes gross profit in their calculations. But if you're not public, you're private, your bank might be looking at that stuff and they might care about gross profit versus stuff that's down here. Because if it's down here in operating expenses, it's just affecting your net income. And you could look more like a poorly run company if you've got too much expense in that operating expenses. That's my take on why it matters. Neil, I don't know if you have anything to contribute on that thought.
Also, just how do you price your items if you don't know what the actual cost is? Like, especially if you're sourcing from multiple countries, keeping it below the line doesn't make sense to me because how do you, or if you're sourcing the same item from multiple countries, just how do you keep track of that? And if you just bury it.
Perfect. Yes. Yes. So actually on the landed cost side, coming back to whether it was, we caught it before it got sold or after, if we catch it after, and I actually already did one of these, I did a landed cost after I had sold it. Let me see if I can find it. Probably this one. Let's see. Yeah. So before it actually adjusted it in inventory, and this one, it actually adjusted it to landed cost variance. but you can see this is in the same neighborhood as the cost of goods sold. Cost of goods sold was 5,000. This is 52400 landed cost variance. And you can see on the profit and loss, both of these are set up to get added together into total cost of revenue. So from a profit and loss standpoint, it actually wouldn't matter if you caught it or if you entered that bill after you sold it, because it's still going to show up above the gross profit line in this line right here. But to your point, Neil, how do you price your items, right? And that's where we really need to geek out on reporting. Sorry, we're an hour into this and we're finally getting to this. But to your point, if I go back to the invoice right here, I should be able to see, I didn't actually look at this yet. Do you know if it all shows up on this line? I think it does.
I think, does it show margin on the SO invoice? I know it would show like the estimated margin on the sales order.
It would show the estimated. I think it will show us the actual here. We might have to go all the way into the AR Tran table to see it. Let's find out. So it's this document.
Yeah,
all right.
Cost is
Now we're going to start having fun here. All right, let's start getting into tables.
Do a lot of SQL queries directly on AR Tran for cost specifically.
And it's two things. One, it's how to price your items. And I think here's where, again, an hour into it, we buried the lead. This is where these tariffs get really important, right? Because in my opinion, I could be wrong on this, but in my opinion, tell me if you agree, part of what's going to determine what companies survive this and what ones don't, if we want to get really dramatic, it's the companies that are able to pass these costs on to their customers as quickly as possible.
Yeah.
And to do that, you need to know what they are, right? So it becomes a reporting problem. So that's one reason, like how to price your items. I think another reason is your salesperson commissions, because if you're compensating your salespeople off of the profit of what they're selling, so they don't just price it at whatever they want to get the deal done, then it also impacts that, right? Because the cost needs to have that additional tariff cost and stuff in there. So somewhere, here we go, right here, cost. Yeah. So it actually passed through, and let's make sure this ties out. If we look at the inventory valuation report, I'm not going to refresh it because we already sold it, but 2547. Does that total up? Let's get out the calculator. There it is, 2547. So by getting the landed cost into inventory before we sold it, all $25.47, including the tariffs, landed on the actual accounts receivable invoice line, which matters because not only can we look at it in the geeky table, but this AR Tran table is also what all of the profitability reports use out of the box. So if you look for all these different ways of slicing profitability, those all use that same field off of AR Tran, the cost. So that we've now reduced our profitability, not just on the financial statements, which we saw it would have done that also if we caught it after we sold it, but we've now affected all the different ways of looking at profitability by customer, salesperson, et cetera. I feel like I'm getting way too long-winded, and am I totally mansplaining here? I think I am. I'll be quiet.
It's good to go over. Like they just got to just really reiterate like why this is important. Yeah.
So that's cool. We were able to get that all the way into the AR invoice line. Where should we go from here? All right. So maybe if we come back to this example where we put a bunch of landed cost codes, you've had a lot more experience with this, Neil. Should I pull up your GI? Should I pull up your SQL query? How can we geek out on how would we deliver
that GI? I think
GI?
that's that one should be pretty universal.
All right, let me tear all this stuff down. I'll keep this as a reference, and let's look at your GI. So tell the story on this. Tell the story about your SQL and how you dashboard and this. Give us that story.
Yeah. So during the first Trump term, when we got the stacking tariffs, was the first kind of fire drill that we had of addressing some of this visibility of landed costs. So while the container module was great for helping us manage and enter them, we needed that next level of visibility into what is actually driving our costs, because this is also like during the COVID years. While duty was a big part of that picture, freight costs were dramatically changing by the week. It felt like jumping up and down, just depending on just what's going on in the world at that time. So we built like this landed cost adjustment detail inquiry to at least just give us the raw data so that we could then kind of crunch it in Excel later. Basically, what is happening, what is the landed cost, and then how did this landed cost get allocated? Because like freight in this example was a big issue for us because container rates were astronomically high. And depending on the mix of products that we brought in, that would cause a pretty dramatic shift in the average cost of an item. Because if we ship something like bulky and cheap, like let's say an oil drain pan container, so it's bulky, it's cheap, doesn't weigh much, or like, and then we'd ship it with other like very dense, like more valuable items that could cause our average cost to swing in multiple ways. Just depending on the actual like makeup of a container.
Are you talking about freight or are you talking about tariffs?
Freight.
Okay.
Freight so specifically here.
All right. So we're off the reservation for tariffs and you're talking about freight. Okay. Yeah. Okay. Got it.
So that's what triggered this was we were seeing fluctuations in our average cost that was taking too long to explain, that we would have to go do a deep dive on a specific item and be like, oh, well, freight was 300% higher than normal on this particular container that we received.
And it had nothing to do with the freight provider charging you more. It just had to do with what was in that particular shipment, what got grouped together.
No, the freight, they were charging us more, but then also there was the other factor of just the actual makeup of what was in the container also changed, because I think at the time we were using an allocation method of by cost instead of by volume. Just because that was just historically what our company had used.
And so you were trying to separate those two and know how much of it was more charge and how much of it was just due to what was shipping together.
Yep. And that was part of it too. And then also how much of it was the steel tariffs that went into effect. Because part of it was like, oh yeah, we could just hand wave it and just blame freight. But part of it was also just steel tariffs. Yeah. And so that's what drove us to create a GI to at least give us that detail of the specific landed cost code, how much it was, and what was the quantity and volume associated with that. And then we tried some other stuff in SQL that was less successful, of just kind of helping us using like a lag function to see, okay, how much of an increase was it from the last time we received a container of this product? Like, so that way we could kind of track the change over time to see like, okay, duty went up 25% over the last one. That's expected. Cool. Freight, oh, that's up 300%. Why? And so we needed a tool to give us that lead to investigate instead of getting caught off guard after we sold the product at a loss, essentially.
Is that SQL query you had sent me?
It was an attempt.
One of the iterations of it? Yeah.
Yeah.
I will pull that up. Give me a second. Do you want to, yeah, how about we look at it and then you can also layer in the part about what you were trying to do with the dashboards. How about that?
Yeah.
So it sounds like, and you know what? I'm going to put a reminder for myself to, where did my notes document go?
Yeah, that query is definitely not ready for prime time.
Yeah, this is you're okay with, are you embarrassed about it or can I share it?
I'd like to take another stab at it, see if I can fix it.
Do you mind if I share what you got and then I can replace
Sure,
it
go
later
ahead.
if you get a better one? Okay.
Yeah.
So this is Neil super raw. Don't be embarrassed. SQL query, better than nothing. It's a good starting point. I think it's just nice to see what your brain was working on. So link to that. I'll pull it up just so we get I'm not going to walk through it, but let's get actually, you know what? I had the same. Okay. Yeah. I don't even have it to pull it up. So I'll put a link to that. And then I'll also do a link to the GI. Let's walk through the GI.
Okay.
So the GI, first off, this PBSC container, that is the SQL query that you're working on. It looks like even though that's in the GI, you didn't even use it in the relations tab or the results grid. So it's just sort of.
So that's something we use in production, but that's that PC Bennett customization.
Oh, that's what that is. So that's not the SQL query. Okay.
Yeah.
It doesn't look like it. I think it ran for me. Did I even try it?
So I removed all the references elsewhere in the GI before maybe not.
Well, I guess I just have to remove it off tables probably. Let's see what happens. Yeah, let's look at some demo data on it, and then let's back into, we can go look at how you built the thing, joins and stuff like that. And maybe let's take this one that we did here, because we had a few lines. Let's see what it looks like. All right, go ahead. Walk us through what we're looking at here.
Yeah, so pretty much this just kind of lays out all of the information that you need to kind of like trace what happened with a specific transaction. So you can see that landed cost 206. These were the items on it. Those were the landed cost codes applied, the receipts that it generated. And then because like on the landed cost thing itself, it'll show you like you're just entering a cost to add in essentially with just an inventory adjustment, like a cost only adjustment. So then the GI then adds that tran unit cost to kind of tell you like, okay, that specific thing is impacting the average cost of the item by 8 cents.
Is that as simple as taking this and dividing by the receipt quantity?
Yep.
Okay.
Because we just wanted to make it a little bit easier to just parse through all this. So if you scroll to the right, you can see the vendor ref numbers, any descriptions, the receipt number. So if you wanted to see what other landed costs might have been attached with that particular container that we received. So there's just additional information, just kind of consolidate from having to hop around from a couple different screens, just show it all to you in one place.
Now, if we pop over to the GI, it looks like I typically, we have a bunch of tables involved. The way I typically read a GI is I look at the join. So it looks like the base of this is IN tran.
Mm-hmm.
So it's one line per inventory tran. Are we grouping at all? Nope, no grouping. Okay. One thing I was curious about in here, can I get this up? Here we go. You're going from IN tran to the PO landed cost detail. I think the PO landed cost detail is this. Let's find out. Yeah, PO landed cost detail. So you don't necessarily have a one-to-one relationship. Is that right?
Right. Yeah, because you could have, IN tran should have one-to-one because that should tie to a specific adjustment. So the final result of every landed cost transaction is a adjustment.
Because of the fact that it created a separate one for each one of these lines.
Mm-hmm.
Okay. That's what I was missing. Because what I was wondering was why in the join is there not a line number included here?
Yeah.
But that's the reason. It's because Acumatica generates a separate document for every line.
Mm-hmm. And I think you could probably go the other way too. So
is that the case then? That's not the case necessarily for freight when you don't populate the inventory ID, right?
So let me see if I can pull up example in mine. Yeah, so it creates the one iron receipt. Oh no.
And Jeremy's commenting, hopping off. Hey, Jeremy, thanks for jumping on. This was probably not as polished as a lot of people were expecting. That's just kind of my style, so I apologize for that. But the idea is, this is, especially on the YouTube side, it's the same link as the live link, so people could reference back on this.
Yeah, so it just creates the one adjustment and it applies it to the individual items. So I'm trying to remember why I set it up that way. I think I did so that way you could see the
help
item.
me understand that join then. Is that still works?
Yeah.
Because you'd wind up with, in the example you just used, you'd wind up with multiple ion tran lines, but you're then essentially joining over to the same PO landed cost detail line. And somehow are you splitting up that cost in here somehow?
Well, ion tran would have like that broken up cost.
I guess you're not really pulling anything from, oh, here we go. Are we pulling any cost though from the PO landed cost?
No, I'm using just ion trans because that's what actually gets posted to.
That's what I was missing then. Okay. Yeah. Okay. So the cost part doesn't matter. You're just grabbing some reference information from the PO landed cost detail. Okay. All right. That makes sense. So we got that join. I'll click through each one of these so people could see it. This one's just getting the item info. This is getting the header level document info. So the stuff that's up here. You do have, what's this R for? Oh, released.
Released, yeah.
Only released documents, okay. Which makes sense. It wouldn't be an ion tran if it wasn't released. And then we've got this one, okay. And then our output, any parameters? Yeah, we have a date parameter range. We got some filters in case you put dates in. We're not grouping. Got a little bit of sorting, and we've got our results grid. Okay. Okay. Now I'm with you. So it sounds like you've done a lot of, for someone who hasn't done any reporting on this, this is really helpful, right? Because they don't have to cobble tables together and spend time doing that. Would you say though that the real value in this is when you dump it out to Excel and do some analysis on it?
Yeah. So like you could dump this out to Excel, do some analysis. You could easily throw this into like a dashboard if you wanted to like look at like a visual, like if you throw it into a chart, if you wanted to see it by receipt. That's something we tried out before, but performance wasn't great. Like, because over the time period we want to look at it, it was like scraping up, hundreds of thousands of records.
And that's when you were trying to go the SQL query route, right? That's when you got your SQL view out and you're trying to, instead of doing Excel, you're trying to show it on a dashboard in Acumatica.
Yep. So that's where we experimented with that, but ultimately we decided that they were happy with Excel for just kind of looking up one-off questions.
I love that stuff. I love that stuff. That is the reason why Excel survives, right? It's just so much easier to do it in Excel. And you also, like, it's useful to put it on the dashboard in Acumatica when you really need that up to the minute or up to the day info. But for this type of analysis, this is like a monthly or quarterly analysis, I would think, right?
Yeah.
So like, doing that manual refresh in Excel that takes you 15 minutes or whatever, not a big deal when you're doing it once a month, once a quarter. That makes sense. So I'm curious then on the Excel side, like what would you be doing? You would essentially dump all this out to Excel and you'd sum it up by the different landed cost codes, or how are you going to group this stuff?
You can, so like you could do like kind of like, we'd typically be looking at a specific item, or like, typically an item. So filter down to tariff 01. and then we'd maybe group it by the landed cost code, and then also receipt number, so that way we can kind of see how the landed cost codes changed over time. So that way we could see like, okay, a year ago, the duty was 3.9%. And then the one that we just received this month is 45%. And the next month it's going to be 150% or however much that is.
That makes sense. And that I think would show really well as a line chart, right? You do some type of bucket at a time, whether you do it weeks or it sounds like maybe months. You want to see the trend that those percentages are going in, because if you're going to price something, you don't just want to price where it's at. You want to get ahead of it a little bit potentially, right?
Yeah, you want to get ahead of it, but you also can like try to game it and figure out like, okay, well, maybe my vendor will give me a concession on price for this item, and then no, you can try to figure out like, okay, maybe you can do some sort of cost sharing type of pricing strategy, or if you're a gambling person, maybe just like hope that these are temporary and kind of price accordingly.
And those are the companies that might go out of business in this trade war, right?
Yeah. So because it's been so variable, just getting as much information as we can get in front of us is like key.
Yeah. That raw dump. Yeah. So you've got a raw dump, and then you're going to analyze it in Excel in different ways, slice and dice.
Mm-hmm.
Do you throw charts on that? Do you throw Excel line charts? Is that how you would look at the trends, or?
Yeah, that's how I like to do it.
Yeah. Okay. Me too.
So my accountants,
I would pull out Excel here,
tables.
but I have absolutely no data, right? So we would not be able to see anything cool looking, and we can't share yours because it's real data, but that would be fun to do. Cool. Well, Neil, any other thoughts you have on all this? I'm going to still round it off after you hop off with a few other things, including I'll probably even do the accounting side, just because my idea is just to record a bunch of thoughts for anyone who cares. Yeah. But do you have any other thoughts?
Oh, lots of thoughts, but yeah, also just like kind of like, I know we briefly mentioned like kind of next steps of like outside of just kind of documenting your landed costs, like kind of the other impacts that the tariffs will have like throughout Acumatica. And we talked about like vendor performance. If you start sourcing from multiple vendors, like tracking lead times and quality control issues, like maybe switch factories to somebody in Cambodia or Vietnam. Maybe they promised a 90-day lead time, but what if it's 120 days or 180 days, or who knows how long it'll be because they're untested factories. So it's kind of tracking vendor performance. And we also,
it looks like you don't have vendor in here, but it'd be really easy to add, wouldn't it?
Oh yeah.
You know what? So, let me just do it. So the one that I include on here will have vendor in it. I'll probably just grab it from landed costs. Mm-hmm. Let's just grab, what would it be? The doc, and then vendor. Let's do the ID and the description.
Well, so in this case, it would always be customs if it's duty, but.
Oh, good point. Yeah. How would we get that original one? The receipt?
Yeah, I guess, yeah, off of the PO. Yeah, I think receipt.
This one? Let's see what happens.
But yeah. Probably not the most useful off of a landed cost view just because of the timing of all that. But it's something that one of the challenges that we're working through right now is kind of setting up more robust vendor performance monitoring. And then
I think it's super useful. I mean, this is super useful as a starting point. A lot of people, especially, if you're a company that hasn't had to deal with this at all, and you don't want to cobble together the data, you've saved people a ton of time by sharing this.
Yeah.
And then they can flesh it out.
Yeah.
All right, here I added. Oh yeah, that's the original vendor. Okay, perfect. So we have that. I like how you did country of origin here in case that populated. So yeah, so your point, we're looking at it across time. We're looking at it by item, and we're also looking at it by vendor and what country it's from in case we need to look at an alternative supplier, right?
Yeah. And also because the duty rate will change dramatically by country of origin. But yeah, it also is like, I think we talked about like cash flow. Do you have the cash to pay these duties when the product arrives?
Yeah, because you haven't got paid by your customer yet.
Nope, customers have paid it, but you have to pay it before you receive the goods.
Wow. Yeah, and ultimately, what really sinks a company is cash, right? That's why I mentioned the bank side of things. You know, when you're dealing with private companies, it's about how you get those loans, and a lot of that comes down to metrics driven off your profit and loss and other things. Yeah. No, interesting. So that also comes down to having better reporting, right? From seeing where the trends are going, and then finance has a better idea of how much more they need to have in the bank. This is not just about, I hadn't thought about that. It's cash from two standpoints, isn't it? One standpoint is the tariffs themselves. And another standpoint I feel like is one thing companies have done is they've bought up a bunch more inventory than usual and stashed it in their warehouse so they wouldn't have to pay the tariffs. But you have a cash flow impact of that, right? Because now you have a bunch more money that's tied up in inventory, right? So it impacts you either way. That's interesting.
Inventory, space constraints. There's it just quickly spirals into just kind of touches every corner of the business at that point.
Wow, definitely a big deal. What other thoughts you got on this? I know. Oh, you had mentioned one. I got one for you. You had mentioned one of the, how do you share? Oh, I guess we already touched on this, but I had written down, how do you fairly share the freight costs when shipping something small together with something big?
Yeah. And so you could use the landed cost code allocation method to kind of tweak that to what you think is fair.
And it sounds like no matter how you do it, there's pros and cons.
Yep. Yeah, you always get bits somewhere.
So we have a visual. So we keep bouncing off of the tariff reservation, which I think is totally fine. We're not talking about tariffs now. We're talking about regular freight, like something like this. And so you have to decide how you're going to distribute that freight bill. And it sounds like none of the options are perfect because there's pros and cons to each one, right?
Yeah.
Gotcha.
Yeah, I guess another interesting thought is if you are sourcing from multiple countries, like how do you correctly price your product at that point? Because like maybe there's 150% duty out of China, but out of Cambodia, maybe it's only going to be 20% or however much it is scheduled to be. If you're sourcing from two countries and how do you price that? Is a customer going to get mad if they got a price increase and they see that it's no longer being produced in China?
Yeah. Oh, Ralph's got Peter had said cash flow is king. Let's see. 100,000 will now cost in tariffs. Yeah. Yeah.
Yep.
So the theory is that, well, I don't want to get into the political theory of what you're supposed to do when that happens, but what a nightmare. I also like Peter's comment about, basically, I think this is probably what you're doing. Although you don't even need the JSON, you don't need to use OData when you're doing a monthly, quarterly analysis. Just dump the GI manually to Excel, right? But at the end of the day, data warehouse, maybe if you want to get fancy, but Excel probably does the job, especially with Power Pivot and Power Query.
Yep, Power Query has been the favorite for our analyst. Trying to get them to experiment more with data self, but so far Power Query is what they're used to.
Okay. Power Pivot also, or just Power Query in Excel? Curious.
Just Power Query.
Okay. Sorry, you were. I cut you off. We're talking about cash. I feel like there was something else.
Cash pricing. As far as pricing, luckily that's out of my realm. I'm just providing data to sales and letting them run with it.
Oh, I know what I was thinking when you were talking about that average costing. So when you were talking about Cambodia versus China, drastically different costs, your average cost is now kind of schizophrenic a little bit, right? It's like
at what point bouncing. Do you create a new item or
like you have two extremes, right? Like maybe the cost from China is $20 and the cost from Cambodia is $5. I'm making it up, right?
Yeah.
And if you're receiving from both of those places simultaneously, you're never going all the way up to 20. You're never going all the way down to 5, but you're bouncing radically between there as the receipts are coming in, right?
Yeah. Yeah. So I guess I just kind of hopefully we'll have the ability to kind of stay in one country or the other and not kind of split. But I think there will be an overlap period as you make that transition if you are like sourcing from new countries.
And I think interesting thought on average versus FIFO. I've seen this in project related environments. So if you're doing FIFO, then you actually have those layers going on. And so what's weird is, yeah, you'll receive from Cambodia and it'll be $5, and then you'll receive from China, it'll be $20, and you've got these like radically different layers. And then so what happens is if you're a salesperson and you're commissioned off of that profit number, where we were looking at the cost, will land on the AR tran line, and from a profitability standpoint, your commissions are like so unpredictable. It's like luck of the draw if you're getting the good Cambodia layer or the bad China layer, right?
Yeah,
it's really wild. I've even seen in a job shop environment where the costs were actually associated down to the lot level, which is not what's it called in Acumatica? Let me see. Let me pull it up. If I pull up an item. Get that back up here. So what do we have? We have average, FIFO, specific. If you're using specific, then it'll actually track your cost down to the lot level. And I've seen this in job shops where you have like a big machine and it's in inventory, but there's a big difference between whether the machine came in like real rusted up and they just finished, like refurbished it, versus they bought it brand new. Huge difference in cost. And so in a job shop like project environment, the project manager has a budget for their project, right? And there could be two machines that are sitting there that both do the job. They're on the floor, but they have very, very different costs. And so you have project managers like out in the warehouse fighting over which lot number they're going to get. That's going to drastically impact the profitability on their project. So this stuff matters. It matters from all sorts of different angles. Neil, any other thoughts? I can let you go and round it off with the accounting piece and some of the other HTC pieces, but any other thoughts to add?
That's what I got for now, but always happy to answer questions.
How answer questions in what kind of way? Like on the forums, or where are you available?
Forums, email, the community site, just LinkedIn, just hit me up wherever.
So what do you want to share? You tell people how to reach you.
Pretty much all the above, whatever platform's convenient for y'all.
You want to share your email with people?
Yeah.
All right, go ahead. I'll even display it on the screen. Shout it out. I'll find it in my email somewhere. Actually, here, let me just find it in my email and paste it. I got this fancy tool here that StreamYard allows us to do this and this. Ta-da! That's how people can reach you right there.
Yep, same username pretty much across all platforms. So if you prefer the Acumatica community site, AUG forums, or LinkedIn, just Cantral.
Cool. Thank you for being so community minded, and thanks for taking an hour and a half out of your day. Appreciate it.
Yeah, anytime. See ya.
All right, see ya. I'll let you drop off, and I'll just keep the recording going with some accounting thoughts. Thanks everyone for attending. You might not care about this last bit of stuff, but I'll cover it anyways. Thanks, Neil. We'll see ya. All right, so I'm going to keep this going for a little bit longer. And I did want to round out the accounting side. That was one thing I wanted to do. So let's come back and look at the transactions that we did and just cover the accounting side for anyone who might care about this on the recording. Let's take this off here. And let's get this back up. All right, so we had already done the entry for when we did the purchase receipt. So let's just go back and look at our transactions and build out the rest of the accounting side. So we had done the purchase receipt. What was next? Next would have been the landed cost. So if we come here, I think it was this one. Yep, this one right here. It had generated 4 different adjustments. So let's take them one at a time. I'll grab the first one here. And I'm going to associate them all with this landed cost number. So I'll say this was landed cost, like this. So this first one, we were adding cost into inventory. So yeah, we should be debiting inventory. So 24 cents on this first one. And then we're hitting this landed cost accrual. So that's over here. My landed cost accrual. We're crediting the accrual for 24 cents. And if we drag this down, so yeah, we had a PO accrual. So the PO accrual is then going to get paid by the AP bill. You know what? Let me just process. We'll skip that. So ultimately, the $19.71 is going to wind up on the regular accounts payable bill to the China vendor. Then we're continuing to increase inventory and stash it in the LC accrual. So we did 24 cents there. Then we had the next one. This is for each one of those landed cost codes here. So we had my super detailed landed cost codes. Is probably too detailed, but we're doing 24, 59, 193, and we can see those hit in each individual adjustment and in each journal entry. So here's the 59 cents, 59, and 59. So we're just continuing to increase that inventory value and stash in LC accrual. Then the next one, $1.93. Further, I think we got up to $25 and something. So maybe was there one more? 2023. Yeah, this is the last one. Yep, we got a whole $3 sitting in there. So 2 more lines. We got $3 into inventory, $3 into LC accrual. That should all sum to 0. Yep. So there we are up to 2547. That was the number that was sitting on our inventory valuation report, which it looks like I closed. That's fine. And then where do we want to go next? So next, let's do the AP side of it. So we did process 2 accounts payable bills. Let's go find those. One was for the China vendor. Looks like I have a few for the UST. What happened here? No, maybe I didn't do these. Were yesterday. I never did the one for the China vendor. So let's process that. Let's find that purchase receipt. That'd be here. Purchase receipt. Let's look for the one for China right here. Let's process the bill. All right, so this is AP bill. AP bill, like that. So we were then crediting accounts payable, 1971. Where's my AP account? Here. And debiting for each one of the individual items, the inventory PO accrual for 771 and $12. Should move down here. Okay. So we've now moved everything by doing that accounts payable bill. We moved everything out of the PO accrual into accounts payable. And then eventually you'd pay the bill. So you'd move out of AP and then hit cash. But I won't do that part. So then we had the $5.76. So this is where Neil was saying you would get, I guess actually this is where these two would happen at the same time. So we just haven't looked at it yet. It would sit for a brief second in land to cost accrual. And then what also happened at the same time was it released the AP bill for that $5. And looks like this is it. So this is where as soon as we released that landed cost transaction, it created and released the AP bill for the tariffs. And this entry happened. You got a bunch of lines on this one too. For it looks like it did one for every landed cost code line. And so is this bill here? Oh, and actually it happened before. Okay, let's. Oh, you know what? Normally it would have happened after. I just didn't process the first AP bill. Let's put all that in there. Then these were, I guess they were, we did have items associated with these. That's okay. I won't put them in there. So we're now crediting accounts payable for 576 and 2459. 193 and $3. Oh, I put it in the wrong spot. So this should be 2200 debiting 2200. So 2200 here. All right, this looks better. So now we've moved everything through the PO accrual and landed cost accrual accounts. And now we're sitting with $25.47 worth of inventory and $25.47 sitting in actual accounts payable, which then those bills will get paid and it'll hit cash. So then the last part of this was the accounts receivable side. So we did that accounts receivable invoice and we pull that up. We should have two sides to this. We should have the revenue side, which is on the accounts receivable invoice itself. Oh, I'm sorry. I need to get this one. There's two different invoicing screens, one in the receivables module, one in sales orders. Let's grab the one in sales orders here. So we'll see the revenue side directly on the invoice. So that is debiting accounts receivable for $98.51. And this is coming from AR invoice. 9851. Where's our AR account? 9851. And then we had 2 lines for the revenue. So we're debiting revenue we're crediting revenue 38.55 and 59.96. So that has now been booked here. So that'll sit on AR until we collect the cash from the customer. And that'll always be sitting in revenue. And then we have the cost side. So back on the invoice, to see that, we have to go look for the inventory document, drill into that. And from there, drill into the journal entry. So it looks like we got 4 lines here. Let's fill that out. So I'm going to say this all came from the invoice. So for the first item, and then the second item, first item, we've now relieved inventory for $988 and debited cost of goods sold for $988. That's way over here. And then the other one, 1559 and 1559. So at the end of the day, it's moved all the way through inventory, although it's going to continue to live on the invoice lines, that cost which we looked at earlier. And we've now got it sitting in accounts payable to pay the vendor. We've got it sitting in accounts receivable to receive the money from the customer. And then we've got $98 of revenue on our books, $25 of cost, which shows up on the profit and loss, which we looked at earlier. So that money is now sitting buried in this revenue number and in this cost of goods sold number. All right, so that's the accounting side. If there's anyone who cares about this, I will put the spreadsheet in the episode links. The episode page will be at augforums.com/episode. What are we at? 150? Yeah, 150. So you'll be able to see those in the related links once I update that. Including the recording is the same as the live link. So this is kind of weird. Yeah, so this is live right now, but the recording will be available here, just boom, instantaneously. And you can already rewind in here. Okay, but I want to put a link to reminder accounting, so SX debits and credits. All right, so that's the accounting side. Then the other thing I did want to cover, this is from that awesome episode from Narav and Peter. We covered the demo data. So Peter pointed out that there's this HTS code database. Now, I'm a total novice at this, but I thought I'd just cover some of the stuff that I learned in the last 24 hours. So first off, we were looking at Neil's example of these. These are HTS codes here, the 9903, 8803, 9903, 0124. And you can find all that stuff at this, what I think is a pretty clean website, especially for a government website. First off, it's a pretty short URL. And then second off, it's pretty easy to navigate. So for example, if we see, I have some examples in here. First thing I noticed was you can see the revisions to the tariff codes. So you can look at the archive here. And I thought it was interesting that if you look at all of 2024, they got up to 10 revisions by November. So it started in January, revision 1, May, revision 2. By November, they were at revision 10. with all the chaos of this year, started in February, revision 1. We're already up to revision 10 in April. So I thought that was interesting. And you can click into each one of these, and basically they're all giant PDF files that you can download. So you can come back here, hit download full revision, and you'll wind up getting this thing called final copy, and it's a giant PDF file. The latest one is 4,421 pages long. So that I thought was interesting. If you open that big PDF file, so I've already downloaded these. You can see I downloaded each revision, or at least all the 2025 ones, and I just named them revision 1, 2, 3, etc. Let's open the latest one. This is from April 14th. Crazy, just about a week ago. So if we open that, there's a few things I found interesting. Now, I have no idea what I'm doing in here. Peter knows this area way better, especially when you're combining multiple charges together, like those 7 layers we talked about earlier. But I thought this was interesting. Page 21. There's a special column. So as you scroll through these, let me scroll through and find one. This is in general what it looks like. So here's an HTS code. Here, let's actually take one off of Neil's sheet here. Let's take the, oh, actually that's a bad example. Let's take this one, 9017308000. 9017308000. Because this PDF file is so big, you'll see it found it up here. Look down here though, nothing yellow. Takes my computer a little bit until you start seeing yellows down here. Oh, it didn't even find anything. Let's see. What if we do just this? Did I type it in right? 9017. 9017.30. Here we go. See, we got some yellows showing up. There we go. So what do we got? We got 901730-8000. So this one right here, this line. So it looks like for what I'll call regular or general countries. And then we've got a column number 2. So column number 1, general and special. And then this extra column 2. So I thought this was interesting. It's 3.9% for general, and then a whopping 45% for whatever this column 2 means. Now that's where we come back to page 21. This tells us what column 2 means. So right here, and there's 4 countries. So this has probably been in place for a long time, but news to me because I'm new to this. I just thought it was interesting. Russia doesn't surprise me. North Korea doesn't surprise me. What I found really interesting, Cuba's still on like the bad list, and Belarus also, probably because they're close ties to Russia. So these 4 countries get a whopping extra tariff applied to them. I didn't even know that. I thought that was interesting. But it's, it's one thing to read it in the news. It's another thing to see it right here in black and white. At least for me, I find it interesting. So I thought that was cool. Also, Neil taught me this. Like originally, I was looking for like spark plugs, for example. That was one of our items. And I'm doing this super painful wait for it to find stuff. All right, now it found some stuff, and I can search through, and it looks like it found 4, and I can look at them one at a time. But Neil pointed out, actually on the website itself, you can just put it in right here. And the first time I did this, I realized it's looking for each word separately. So like it found plug in here. I think it even tried to be too smart. Like it took off the S. But I want the exact phrase. So similar to Google, you can put double quotes around it. And this is a lot better. So it takes me right. It's much faster. The 8511 section, which is, I think, where I landed. Yeah, I landed in the same spot in the PDF file. But this is slower. This is faster. And it's got these nice color highlights. So I like this better. But we're looking at the same thing. We've got the column 1, we got the column 2. We can see there's the 2.5%. We can see there's that whopping 35% that applies to Belarus, Cuba, Russia, and North Korea. So that was interesting. What else did I find interesting? We already looked at the table. So the bulk of this is this table format where you've got a code, you've got a heading and a suffix, a bunch of descriptions, then a percentage, these column 1 and column 2. And Neil had pointed out that it's not always a percentage. Sometimes it's a flat fee and then a percentage. You would see that listed here. But that's the bulk of this document. It's table after table after table. See if we can find one with a flat rate in here. See if I get lucky. Oh, I just saw one. It's hard to scroll because there's over 4,000 pages. Actually, over 4,044. Here's an example. 12.1 cents per kilogram plus 4.6%. So this definitely gets complicated. And again, as Peter pointed out and Neil pointed out, it's not just one code. It's multiple codes for a given item. And actually, I didn't show this. I didn't show this yet. But Neil pointed out this, all 1, 2, 3, 4 of these sections with their percentages apply to one item. The item was blacked out. But Neil also sent me another one, and he said it was okay to share this. Here's an example of, looks like 1, 2, 3 codes applied to here. The item did not get blacked out. So this W3248, you can actually see that on their website. So if I pull up, oh, where did I put that information? I put it here. Give me a second to find that. I stored the Wilmar part number on cross references. Just a quick way to get it. Let's find. So it was number 5 here. And here's the URL. So that this item right here with W3248, this item is related to this. So here's where it's complicated. Like I can't just go, originally what I was trying to do is I was trying to search for spark plug, or in this case, lead-free solder. But in actuality, even if you find it, it's in multiple places. It's in multiple codes. So even that's not reliable. But anyway, still interesting to see it in black and white in this document. All right, what else we got? Let's see. I did notice, let's see, what was this? I don't even remember what this was. Let's take a look. If we compare the most current version of the PDF, so page 2869. Electrical machinery. Oh, I don't even remember what I was trying to highlight here. Well, let's pull it up. So let's look up the file from about a year ago, last May, 11 months ago. 2917. Well, looks like I did not have a good example here. I think I was trying to find one that had a different rate. Let's see if we can find it. 8511. Okay. Oh, okay. I remember what I was doing. All right. So I was trying to find originally spark plugs, right? I could see it's 2.5%. That is in the latest PDF file. Then, and you can see this for 85, 11, 10, 0, 0, 0, 0. If I look at 85, 11, 10, blah, 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 spark plugs in the file from a year ago, it's also at 2.5%. And so I was confused. I was like, well, I know that there's been a massive increase in tariffs. Why don't I see it? It's just 2.5% from a year ago and today. It hasn't changed. Well, that's where I discovered that. Oh, okay. I forgot about this. All right. So this was me finding it. So Neil zoomed in on it and showed us it's this 990301. But this was me just trying to find that on my own. So I actually went into ChatGPT. Let me find this. Again, for people who know nothing about tariffs like me, I think it's kind of interesting. So I went into ChatGPT and I asked, where do the Trump, and I didn't even spell it right, where do the Trump tariffs appear in the really big file? And I thought I had a pretty nice response. Like it even acknowledges what I said, that huge 4,000 plus page document, and it honed in on this section here. So it also told me to go look in General Note 20, which I thought was interesting. So I did that. You can take a look at, or we can take a look at 3518. 3518. Here's General Note 20. And look at that right there. There's the 99038801 that Neil had pointed out to us, 99. Now this is a little bit off, but it's really close because it's a little more involved than that, but it's pretty cool to see it right on Neil's documents and ChatGPT saying the same thing. And there's that additional 25%. I guess it calls it an ad valorem rate buried in page 3,518. But there it is in black and white in some big legal document that we can also see reflected on Neil's document at 25% right there. Actually, is it the same? 99038803. 99038801. Really close. Super close. And I think we can even see in page 3834. Yeah, here's 9801, 02, and 03. It's telling us to add the 25%. This I don't understand, though. I don't know why there's separate lines for 01, 02, 03. But this is a total lay person's reading of this tariff stuff. Peter, is Peter chiming in still? Aye. Actually, Peter, if you're still on this, oh my goodness, I don't think anyone's still on this. If you want to jump in on this, want to chat about this? If you're available, just make this one massive long broadcast. If you see this, Peter, I just dropped a link in the chat. See if you can pop in there to the StreamYard. You still there, Peter? So Peter says it's a combination of product, yep, and the country of origin. That's why you got those multiple layers, which I think has to do with the two columns. Maybe Peter can help us parse this out if he's still on. Buying a product that seems to be exempt, but you buy it from a country that imports Venezuelan oil, you'll pay 25%. Crazy. I'll be shocked if Peter's still on, but if you are still on, go ahead and jump on that StreamYard link I just put in the chat. Oh, you might not be able to see it. Let's see. It's this. It's that link right there. I guess you have to type it in if you're on LinkedIn. So let me see if I can comment on LinkedIn. I have to go open up LinkedIn to comment to give you a nice clean link. Let's see here. If you're still there, Peter, I just put the link in there. Otherwise, I'll give Peter a few minutes if he's still there. But otherwise, this is kind of Tim's foray into the world of tariffs and kind of a person's take for looking at it just in the last 24 hours. I just thought some of this was info, kind of interesting info to share. I'll put a link to Peter and Narav's episode that they did. You can see it's ABCs of ERP and beyond. I'll put that in the episode links. Otherwise, we don't get Peter in the next minute or so, I think I'll wrap it up. This was some of my notes from their episode, but I'll just let you watch it and glean this information yourself. This will be my... Oh, we got Peter here. Hey. What are you still doing on this thing? Been broadcasting for 2 hours. You're a tariff geek, huh? I don't even know what I'm talking about.
It's Wednesday. It's 10 p.m. here in the UK. What better place to be than talking about tariffs? It's been the story of my life for the last few weeks.
So, this was me just kind of, and actually, I didn't even know about this HTS site until I saw your I don't even know what you call it, podcast, broadcast, whatever. Yeah, can you talk through this document in any more detail? Like, do you want to pull it up on your screen? I'll pull it up on mine. What do you think?
Yeah, I guess this has always been around, but obviously it's been in the news for the last, say, 6 months or so, especially when everyone was gearing up for Trump 2.0. We knew this was going to be the case. We just didn't know what it kind of was going to look like. So I think since then, it's been more of a focus for businesses, purely because we knew it was going to be quite impactful, but also the volatility, right? It's a little bit easier to swallow when you kind of know what to expect and you don't really have to track as much if you have something consistent to measure, but we just don't know what it's going to be like. We're starting to feel it now, and we're all trying to learn as we go along on some of this stuff. When I first of all got involved with some of this stuff, obviously I can't speak about specifics of what I've been doing, but at least for the company I work with, ITW, we're a global manufacturer, $16 billion revenue per year, a mass importer and exporter, a US-based company. So the impact is going to be felt for us and our customers on both sides of the supply chain. So yeah, it's been something that we've been having to help each other, spread the message, learn what does it mean, how do we track it, what's the best approach. I think you might have heard on our podcast, me and Narav said that there's no winning at this game. It's just how can we lose the least. And I think that the areas that we can at least gain or win would be at least knowing why we're experiencing this and how we can track and measure it. Because then we might have these opportunities to see, okay, can we leverage maybe a different vendor? Can we leverage, routing products through different geographical spaces? Or can we wait for a gap where there's this, like we're experiencing now, these 90-day cool-offs of certain, product lines and certain pieces of these tariffs, so we can bulk purchase to get it into the US before the 90 days are up and the tariffs raise again. That's the only way that we can win on some of that stuff.
So remind me, the company you're working with is using Acumatica, or I'm trying to remember what your Acumatica connection was.
So I work for ITW. It's known as the largest company you've never heard of. It's essentially made up of hundreds of smaller businesses. We have 85 divisions spread in 7 major market industries. And we're quite decentralized in our approach. So we are an enterprise, but we don't use an enterprise ERP. We have hundreds of companies that almost operate as their own company, their own P&L, their own balance sheet. So we have companies on all different types of ERP. We have some that have already moved on to Acumatica. We have others that are in the process of moving on to Acumatica. But as you know, Tim, ERP migrations, companies go through these every 10 to 15 years. And with a large enterprise like ourselves that are decentralized, owning hundreds of companies, it's not surprising that someone is going through an ERP migration at any point in time.
But you are then, at least in some facet, it sounds like it's mostly a data exercise for you, like consolidating data and stuff like that. But in some facet, you are dealing with landed costs in Acumatica. I didn't remember that.
Yes, we will be. But I think every company, regardless of ERP, will be handling landed costs purely from financial compliance, from audit compliance. And you want to know, we just said that cash flow is king. We want to know what's going on with costs and cost of goods sold, and ultimately profitability. Are we as profitable as we think we are when we factor in some of these landed costs? So from my point, my love is Power BI and data analysis. So I've been working with our corporate teams on how we look at landed costs from an enterprise level, which is essentially just rolling up all of the hundreds of ITW business units and looking at the full enterprise-wide impact of landed costs.
This is what I love about doing live broadcasts. Like, you just don't know what's going to happen. It's 5 o'clock here, or 5:15. It's 10:15 there. You got another 30 minutes to go on this, or are you ready to go to bed?
Yeah, I'm here.
Really?
I work most time zones, so.
I mean, I would love to talk on the reporting side, though. I was wondering though if you could help me out on like just a couple thoughts on this website first, since you seem to know it way better. Let me pull it back up. So first thing, on the archive, I can't imagine what it's like to be the person who has to manage this PDF file now. You had 2 different releases on the same day. That's insane. And then we've got 5 alone just in April. I mean, is that as insane as it looks?
It's unprecedented. That normally isn't the case, but without getting political, it depends on what mood he decides to be in on any one day, and can suddenly do a 180 on some of the things that he might have said at the start of the day. So these teams have to keep up with that. If he decides to suddenly put a 90-day pause on certain industries, that means someone has to rewrite the release.
Yeah, and it seems like it's not just about going in and making one little change. This is so detailed. I mean, that's just got to be a massive amount of work that some people are having to do. You also mentioned buried in these files, there's like multiple layers to this thing. And I mean, do you even, when you look at this, do you actually decipher the PDF, or do you just kind of let a broker figure it out for you?
It depends on who needs to do what with some of these documents. So at the moment, the only reason why I'm living and breathing this most waking hours is our corporate global trade compliance team reached out and wanted to be able to do some what if analysis and look at the impact of some of the stuff in Power BI. They had actually inherited an old Power BI model back when we weren't too concerned on the landscape of tariffs and duties. Like, duties have been around for decades. It's the way that global trade operates. Countries want to protect their own domestic industries. So, for example, the US have a big steel industry and a big automotive industry. So to incentivize local for local purchasing, you want to kind of penalize other countries from coming in and flooding your market with cheaper stuff, because then your own domestic market just dies overnight. So these tariffs and duties have been around for decades. It's a way of protecting what your country contributes to the world, I guess. So things like steel, automotive, oil, and such have always attracted duties, regardless of anyone's opinion of China or anyone's opinion of a particular product. It's just so different now in the current kind of Trump 2.0 that we're seeing with his kind of view on how he sees tariffs and sees duties, and the working relationship on global trade with some of these countries. So it's not like we've never seen stacked duties before. We just haven't seen it at this level, and this volatility and changes to it. So it's not new. It's just the way that it's happening and the frequency of changes is kind of new. And that's, I guess, why we're sitting here now talking about how the hell do we track this in ERP.
So when you gave this example before about there can be up to 7 different duties applicable, that part you think is unprecedented, or it's more the percentages associated with them, or both?
Yeah, I guess it's kind of both, and it's just that they're always kind of changing. So fundamentally, it comes down to 2 major things. What is the product that we're talking about, which is identified by the HTS code, which is a harmonized tariff schedule. It gives us an agreed upon framework for a particular item. And as we've seen with the decimal places, it gets very specific. So you essentially have an HTS number that's made up of originally 4 digits. And that 4-digit is more of a high level.
Let me pull that up. Give me a second. Let me get the visual on that. Let me get one that's you have a good actual example to use?
Yes.
Actually, here, let me continue with Neil's example. So let's take this 10 articles, 8007 005,000. And I'm going to stick with the PDF. Go ahead.
So 8007 is the first 4 digits. And that first 4 digits.
Let me pull it up here. Give me a second. Let me get it up in the PDF, then you can talk through it. Just got to wait for it to search. I noticed this too. You got these yellow highlights. Oh, so there's even like a color component now to this. All right, what was his example? 5,000. Here, right here. Okay. All right, go ahead.
Yes, 8007 will be anything that's made out of tin by the looks of it. So that could be sheet metal, it could be a nut or a bolt or a threaded stud, or as we can see, tin bars or rods or tin waste, etc., etc. So 8007 is like the first level. Then what we call the 6-digit variant, which is essentially the decimal place plus the next 2, would be the next subsection of that. So here we've got 00. 00 tends to be the first level. Then you might have 01 and 02 and 03. It depends how many splits there are. And then from the 6-digit, we have then the 8-digit, which is another subsection of that. So if we have a look at that one at the bottom, 8007 003100, there's a very specific type of tin foil, whereby that product is tin foil of a thickness not exceeding 0.2 millimeters.
And you know why the last 2, I guess they call the suffix, it gets its own column. It makes it look really important.
It's another subsection. So I think some of this is the culmination of decades and decades of identifying parts. And I think some of this is so specific because look, no one wants to pay tariffs. No one wants to pay above what they feel that they should pay. So all it takes is one government to say to another government, well, this particular tin is only this thick, so it shouldn't be charged the same as someone that's got thicker tin. And then, of course, they go, okay, well, let's do another subsection to do that. So everyone's going to try and find legitimate loopholes. So then we end up with a 4,000-page document.
It's like any bill that goes through Congress. That's why they get so big, is they're just lobbied to death, right?
It's all the subsections. Yeah.
I mean, on the Congress side of things, do you know like who normally is handling all that lobbying and all that? Is it normally the executive branch in the U.S. or is it prior to this year? Is it somewhere else? That I wonder who kind of runs point on fielding all those complaints and things.
I would imagine so. I'm not too sure. We've got our own problems here in the UK. So
interesting.
But yeah, it's now the point of how do we know what we're supposed to be paying? And a lot of companies, especially small to medium-sized businesses, probably haven't got the resource, let alone a dedicated full-time expert on tariffs and charges. So I think a lot of people are at the mercy of whatever bill you get from your customs broker or from Customs and Border Protection Direct, that you just have to pay. They're the experts of this. A lot of companies, I think, are just at the mercy of it. They obviously can't, they can't lie or just try and make more revenue by making things up. You can trust brokers, and you can certainly trust Customs and Border Protection to be charging you the correct thing. I don't think that's in question, but it's just a lot of companies don't know. And I think some people, if they're not tracking it, and if we don't spread these messages, are in for a bit of a shock when raw materials land in the US and they suddenly get walloped with a 170% duty rate.
Tell me, for you personally, like, why do you even care about this 4,400 plus page PDF document or the HTS website? Why don't you just I'll take one of Neil's examples again. Actually, let me take the other one. Why don't you just take what's on the bill? I mean, do you ever push back on anything that's on the bill? Why do you even care about the thing? Why don't you just care about the bills that are coming through? Does that make sense?
Yeah, I mean, you can't push back because it is what it is, and that's
okay.
That is the agreed price. There's no haggling you can do on this. That is what the US government have decided to charge you. It's essentially, it's a tax. You can't just go and argue about the tax percentage because it is what it is. You don't have a say on that.
Well, I can see that you couldn't argue the 25%, for example, but could you potentially argue that, you know what, this particular thing is not really 90, 17, 30, 8,000. It really should fall into a different category. Would you ever do that?
You could, but they will always go by the customs document. So it depends on how that is handled. So whoever's doing the customs document, whether that's a bill of lading, whether that's on the commercial invoice, those documents have to have the stated HTS code and the country of origin. And from those two pieces of information, Customs and Border Control or your broker will use that HTS lookup site along with the country of origin and essentially look up what percentage needs to be charged on the declared value. So that's what these percentages are. They are what is the entered value, which we can see is blacked out on this particular example, and apply 20% of that declared value, plus 10%, plus 25%, whatever other duties that hits based on these stacked tariffs. So one could say, okay, well, Mr. Border Control, this particular item should never have been declared as a 9017 30 8,000. It's actually a 9017 40 6,000, which might have a lower percentage. But there's not too much variability at that granular level. Most 9017s probably have the same percentage anyway.
Got it. Okay.
So you could end up in a position where you're actually in more trouble for misdeclaring the correct categorization of the products in the first place.
So it sounds like by the time it gets to customs, you don't want to mess with it. But where it does get a little more fluid, it seems like, is further upstream. Whoever's generating the bill of lading document, which we're not looking at here. We're looking at a U.S. customs document. But it sounds like you're saying they're essentially just pulling the data off of the bill of lading, which is going to have the HTS codes, and it's going to have the country of origin, and it's going to have the declared values. So who creates those? Like, is that in our example of we're buying something from a vendor in China? Is that the vendor in China? Is that someone at the port when they put it on the boat in China? Where does that bill of lading get generated?
So this entry summary will be done by customs, and they will take the information from the commercial invoice or the bill of lading. Now, the person who's doing that, it depends on the terms of sale. It depends who is being declared as the importer. And the importer is responsible for providing the correct information to customs when it lands there. So this is where you can get into the whole Incoterms. And Incoterms is, again, a set of globally agreed terms that stipulates
I heard you guys talk
who
about
is
that.
responsible for what. Yeah.
I put that in my notes here. Let's see. Yeah, your Incoterms here. Okay. Yep. Sorry.
Yeah, there we go. So these are agreed terms. From one extreme to the other, we've got XWorks on one end and we've got DDP all the way on the other. And in those terms states who is responsible for what, who is responsible for paying the freight, who is responsible for declaring it at customs, who is responsible for if that container falls off the ship in the middle of the Atlantic Ocean, whose fault is it? So if we go from one extreme, which is XWorks, if you are a US customer and you're buying something from China XWorks, everything is on you. That your vendor in China only has to make it available at their premises. They don't even have to put it onto the vehicle that then drives to the port to get it on the ship. They don't have to do anything, which means you as a customer have to do the export declaration to get it out of China. You have to arrange the boat. You have to arrange the shipping. You have to pay for the freight. You have to maybe pay for insurance. You have to do the import declaration, and you have to declare the country of origin, the HTS code, the declared value, everything to customs. So that's a lot of heavy lift on you as the customer. It's great for the vendor because they haven't got to do anything at all. Whereas on the other side of that, DDP is that your vendor, if your vendor is selling to you under DDP terms, is they do the lot. They own the goods. They're responsible for it all the way up to when it gets to your front door in the US. They will pay all the freight. They will do all the export summary, the import summary, freight charges. They will also, clues in the title there, duty paid. They will pay the duty as well. So these Incoterms clearly state who's paying what and who's responsible for what. So when we come to your question at the start, who is responsible for providing that information to customs, who then work out what the necessary duty rates are? It depends. It depends on the Incoterms at the point of sale.
So I guess where I was, what the real answer I was curious about is, it sounds like it's not a government agency who typically puts that together. It's probably either the vendor or some freight broker. It's not like a official job. It's really kind of what you decide to put on that paperwork, right?
Yep. So this is why it's a big industry. Freight brokers, they are the experts of this. And if you're on the vendor side or the customer side, most people use the services of a broker because they know what they're doing with the stuff. And typically they'll say, right, whether you're the vendor or the customer, you go to a broker and you go, I'm buying this from this person, or I'm selling this to this person under these terms. Here's the information, and they will handle everything. They will book the necessary freight. They will bill the right people, which Neil was saying earlier. It depends how much of the services of the broker you want to use, but you can go all the way to, I haven't got a clue. I'm just the customer buying it. Handle everything for me and just bill me whatever you need to bill me under these Incoterms. And similarly, the vendor would do the same as well. I don't know what I'm doing. I'm just trying to sell it to this guy in the US or this company in the US under these Incoterms. This is the product. This is the value. I want to send it by sea freight or air freight, and they'll handle the rest. That's where brokers are. Really
the whole broker thing sounds like a very gray at best and even shady at worst type of an industry. Like, I feel like maybe this is why, a lot of times in the movies, the criminal is in some type of import export work. I mean, do you think that's the case in real life, or is that embellished by the
I don't think so. I think they've damaged their reputation too much, and they'll probably be thrown in jail as well, because we're not dealing with just paying anyone for the services or paying anyone for duties. This is a tax. We are all culpable to government regulations, so they can't really do anything shady, because anything shady in this world is just straight up illegal and you'll be out of business very quickly.
Got it. And so, like, all right, let's say it's a regular shipping container, right? You close that thing, you seal it up, and you have the paperwork is it like even on the outside of the container, or is it on the inside? How does it get
it can be both.
How does it get attached to the container? Do you know?
It can be both. Essentially, with the customs documentation, you'll have two important pieces. One will be the commercial invoice. So that's where you will see information about the HTS code, the country of origin, the declared value, who's the buyer, who's the seller. Then you'll also have a packing list. And that packing list is the physical goods. So it will say it's packed on 10 pallets in 4,000 boxes of this weight, of this volume, etc., etc. So when that lands and they want to do a security check and they open the doors of the container and there's 10 pallets in there and there's 4,000 boxes and it matches what the paperwork is, then it'll clear customs a lot easier. If there's any discrepancies, that's where you can start to get delays and incur storage costs from the port in question, because obviously they've got thousands of containers they're clearing every day. They haven't got the space to have in limbo containers that are stuck because of paperwork issues. So everything has to be pretty accurate on that stuff. But it's important as well on outside of the US. It's important for things like where customs have other regulations they have to hit. Environmental ones is a big one. So if you're shipping, for example, into Australia, and I think also into the US, you can't just use any wooden pallet. It needs to be a chemically or heat treated pallet, because wood is a natural substance. It can have wood lice that could be damaging to the environment of which the container's turned up in. So there's other kind of environmental regulations that happen when you're talking about international trade outside of duties. But that's a whole another world. But in terms of,
if it lands in the U.S., like U.S. customs, it goes to the port. Sounds a lot like an airport. Like if you arrive on an international flight to a country, you got to go through immigration and it's the audit that they do on you is very kind of by feel, right? I mean, they look at your passport, they look at you, and they're just trying to smell if there's something wrong, right?
Yep.
It sounds like it's a very similar thing on the good side. I mean, that's essentially what's happening here, and it sounds like a similar thing, right? They're just kind of does it seem to be in order? I don't necessarily have a checklist of stuff. I'm just kind of going off my gut feel if this shipment looks legit or not, right?
Yep. And they'll do spot checks as well. Even if it looks legit and everything's right on the paperwork, they will, well, they do every single day. They pull a certain number of containers for spot checks. Go, right, everything smells great about this, but let's check. And they'll open up the container and do a spot check. Is it right to the paperwork?
Back to the movie world. Do you know any numbers on like what percentage they actually open up containers?
I don't think anyone knows apart from them.
Yeah, but I would guess it's probably less than 1%. I mean, something like that, right? Just because of the sheer volume, there's no way they could open up all those containers, right?
Yeah, and technology is always getting better, so they can always digitally look into these containers through X-rays. They can put probes in. Not that you would ever survive, but they can put probes in to see if there's a higher level of carbon dioxide. High levels of that shows that there might be living organisms in there that are emitting more carbon dioxide.
That's the movie scenario I'm thinking about here. Yeah,
that's it. But they can do that.
That's interesting.
Yeah. And heat mapping it and all this kind of stuff.
Yeah, looking for the red instead of the green on that. Yeah, makes sense.
Yep. But the duties, there's like, if this was an Excel formula, putting my data analyst hat back on, this would be a huge nested if statement to be able to get to what duty I'm expected to pay. And I know I chucked a couple in the chat. Two of the big chargeable industries.
This one?
Yeah. So steel and aluminium is protecting the steel and aluminium industries of America. Similarly, automotive is a huge industry in America, and you want to protect that. You don't want China flooding your market with Chinese cars. You want to be able to promote Ford and GMC and all of the domestic car manufacturing. So to protect that, you can put an additional duty on that. So it might be a country that Trump gets on very well with, but if it's a country that's selling a car, doesn't matter which country you are, it's still going to incur the auto and auto parts 232 duty, because that's the industry we want to protect. So that's where this whole idea of it's two things. It's what the product is and where it's coming from.
Yeah.
Can affect that. Some of the other ones there, IEPA, fentanyl. Fentanyl drug use is an issue. If you're a country that is seen as not doing enough to combat drug use in America, then you also get penalized, essentially. So at the moment, fentanyl is on China, Canada, and Mexico. So at the moment, the US government feel that those three countries aren't doing enough to stop the influx of drugs into America. So if you're one of those three countries and you're the country of origin on your customs paperwork, you'll be hit with that particular rate, which is China's 20%, Canada and Mexico are 25%. Trump at the moment feels that Canada's not doing enough to stop drugs going across the border. So the fentanyl rate applies for Canada. And then there's the reciprocal ones. So other countries that are in this kind of trade war are saying to America, well, you also have a drug problem of producing drugs. We're going to hit you with a fentanyl charge. And of course, Trump turns around and goes, right, we're going to hit you with a fentanyl charge as well. So you have these reciprocal ones. You also have the blanket on China, which is the Section 301, which is pretty much 25% across the board, apart from some things that Trump knows that America needs. So the latest one at the moment
301.
is
Where was 301?
Section 301. Things like
Not the
semiconductors.
9903. That's different. Okay, sorry.
Yeah. So we're talking about precious metals that are used in chips, semiconductors. Some of that isn't being hit at the blanket 25% because, Trump knows that America wants to be the leader in artificial intelligence.
I see.
And you're not going to be a world leader in artificial intelligence if you can't get your hands on the chips that NVIDIA make in China. So you don't want to kind of penalize yourself. So some of those are at a lower rate to be able to still be in the AI race. The other one there, Venezuelan oil import. If you are a country that uses Venezuelan oil, you get hit by another tariff on top of that. So China imports and uses Venezuelan oil. India, Spain, Brazil, Turkey. America doesn't like that countries use Venezuelan oil and essentially is plowing money into Venezuela. So you get penalized if you're a customer of Venezuelan oil. I think Italy might also be on that list, or they used to be.
I'm trying to find 301 here. I wanted to see 301. I love seeing it in black and white. I don't know why I enjoy that. 301 something.
So Section 301 was the from the US trade.
Oh, not within the HTS.
No,
code.
it's not a tariff.
Different
no,
thing. Okay.
Yeah.
Gotcha.
Yep.
Okay.
Yep. Section 301, a little bit like article numbers and
got it.
Things like that. So yeah, Section 301 Section 301 is kind of a blanket term for the China tariffs, as it were.
Oh, I lost you for a second. For the stuff going on with China.
Yeah, so it's like a blanket term for China tariffs, Section 301.
Okay. I wanted to pull up, putting back on the geeky reporting hat for a minute. If I pull back up, the GI that Neil had shared, even though, it's not perfect, of course. Like, we're not talking about crazy data here, right? You were even talking about predictive stuff. You're doing Power BI to analyze, what's a fairly simple raw data set, but we have data points I think we care about. One is the date, so we can look over weeks, over months, over whatever. One's the vendor, the country of origin. So we're not talking about a ton of data, but some data set that looks something like this. And then sounds like you're running that through Power BI for analysis. I was curious if you're also using something like a chat GPT to look for trends or anything like that.
Yeah, I guess it depends. If I were to put my data engineering hat on, it always comes down to the 3 V's, which is volume, velocity, and variability. So volume, how much data we're talking about. We have to be mindful that Acumatica is a production ERP, and we have other teams doing things, quotations going on, sales going on, purchase orders going on. So if we want to pull volumes and volumes of data, we don't want to risk our production environment slowing down and tables locking for other users. So it depends on the volume. It depends on the velocity. So if we were talking around, maybe this was an automated process and we were posting, thousands of landed costs per hour, then how are we going to handle that? Are we going to be refreshing this GI every minute? Again, you can end up slowing the system down for other users. And variability is the final one of the V's. Like, how often does this data change? I think once it's posted in the system, it's not going to change unless you need to go back and correct anything. So my point around Power BI and pulling it out into JSON, putting it into a data warehouse, it depends on those 3 V's. The reason why I suggested that on some of the scenario analysis, I've seen some companies, what they want to do is go, okay, here's all of the things that I purchased. I'm in the US. Here's all of the things here's all of the purchase receipts I made in 2024. That could be tens of thousands of purchase receipts, hundreds of thousands of purchase receipts. I want to take all of that and go, right, what does that look like if I bought a similar amount in 2025? What's the total potential impact of duties? That's going to be something that you can obviously put together into a GI, but do you really want to be refreshing that GI on a year's worth of purchase receipts?
At that point, you don't really even care about landed cost data. You only care about volume of receipts, right? Because you're gonna put up your own estimates for the way landed costs are going to change, the percentage.
Yeah. This year, how much am I going to pay out in duties? So I don't need to know the granular data, but I certainly might want to be able to look at that data on maybe you have item classes and you want to go, right, I'm going to end up spending X number of dollars on duties for this particular product group, or on this particular set of products that I know that I only sell to this customer. You want to be able to see that impact. So some companies are going, right, let's just look at the last 12 months, gather the data from like that HTS website, look at what the potential duties are if I bought a similar amount as I did in the last 12 months for the next 12 months. And what is that number? By December 31st, how much will I have paid out in duties? People want to see what they're going to be exposed to. 1, from a cash flow point of view, 2, from a profitability point of view, and 3, maybe to make some strategic decisions. Maybe there's a particular market industry that you want to exit as your long-term strategy of your business. Maybe you might want to start thinking about exiting that quicker than you originally planned. Or maybe there's opportunities. Maybe there's opportunities of, I don't know, maybe you're in a position where you're a manufacturer and there's a project that you've been delaying because it costs too much in CapEx to do, but it would save you a ton in potential duties. Now suddenly that CapEx will find money because that CapEx involves maybe a change in your bill of materials. Maybe no longer do you need to buy that Chinese steel. Maybe now you're buying an alloy from a preferential country, but it needs a CapEx investment. Well, you don't get to be able to see the data and make those decisions if you don't know your potential impact of doing nothing. Like, if I do nothing, I might end up spending $1 million in extra duties. Now that CapEx that actually only costs $200,000 to implement is suddenly a lot more favorable, and you'll be saving yourself $800,000 over the year. So those kind of strategic decisions you don't get to make unless you can pull this data out and do some of the scenario testing.
Is that your cat? I saw your cat was on your.
Yeah,
on
it's
your
like
podcast.
10:50 here. He hasn't got a clue why I'm not in bed yet.
I love it. It sounds like that's the world that you mostly live in, is more the analytical world, not so much the blocking and tackling in Acumatica, more the strategic analysis of it.
Yep.
That's cool. Awesome.
Yeah.
Hey, thanks for staying up late. I appreciate it.
No worries. It's sad, but I love this kind of stuff, and I just enjoy like being able to answer these questions because these are real world things, and a lot of this kind of stuff we've never had to really think about before. But now it can certainly impact both the day-to-day of how we track it, how we're still compliant, to how our sales teams on a day-to-day basis draw up their quotes, all the way through to some long 3 to 5 year strategic direction of companies. All of this is now being looked at because of, I think, the global shakeup that we see. I think global trade is going to be very different over the next 3 to 5 years. So, yeah, I kind of get a kick out of being able to help teams all the way to senior leaders, being able to kind of give them some kind of insight of potential scenarios on this stuff.
Yeah, and to the point you made earlier, like you're working for a large organization that sort of has that carved out for a role for you, but a lot of these small and medium-sized businesses just not only have they never had to deal with it before, but there's no one in the business to deal with it. So yeah, who do they turn to look to analyze this kind of stuff?
Yeah, exactly. And that's why I always try and carve out time for stuff like this, because there's going to be a load of people there. And it wasn't that long ago when I was like, what the hell is an Incoterm? What is an HTS code? I hadn't got a clue. And I certainly wouldn't want to be in a position where it's my money. I am the owner of the business, and I've suddenly got whacked with a $10,000 duty bill.
Yeah.
And I don't understand why. And there's nothing you can do about it, because it's not like you can choose to pay it. It's a tax and you're legally obliged to pay it. So yeah, I think it's important to spread the message. Whether you agree with it or not is a separate subject. But I think we can all kind of help each other learn about what it is, why it is, and how do we track this, both from what we've seen earlier today on the example you gave in Acumatica, through to some of the high level stuff that I've kind of ended with.
Yeah, to your point about it being a tax, there's two certain things: death and taxes. And no matter what you think about it, you have to deal with it, right? Yeah. Yeah,
exactly. Yeah, and we've always had taxes. It's just not at this unprecedented level that we're seeing.
Yeah,
now.
And the volatility of it, just the complete unpredictability of it. Yeah. Well, thanks. Thanks for staying up. Whoa, we got someone else who's on here. Look at this. Wow. We got someone who's got a pay stand. All right, so we got an ISV who's got something. I also got an email from I do want to highlight this other one. I want to highlight, you might find this one interesting also. Let me see if I can find the email. And then I'll let you get off to bed.
My cat will be very happy with you, Tim.
Am I sharing my screen? Can you see it on your end?
No.
I lost where you are. Yes or no?
No.
No? Okay, hold on a second. Got too many things open here. Let me grab. Gotta find. Here we go. I guess the email was much simpler than I was expecting, but I'll pull it up anyways. I've had Mark on my podcast before. So this is an ISV that handles pricing. And I want to pick his brain about how they pass the tariffs on to customers. Because one thing, actually, Neil and I forgot to talk about this, but one issue he's run into, and I've noticed as well, is the landed costs don't get their own cost bucket within the inventory layer. So that's why you have to crunch so much data to report on this stuff, because you have to go look at transaction by transaction. So it'd be interesting to hear what Mark's Rockton software product, how they're handling that. Be interesting to learn more about that.
Yep. And sometimes it's the people behind us as well. It's easy from from us from a technical standpoint to be able to go, well, this is how you do it from a technical point of view. This is how our ERP can do it. This is how you can report on it. But there's also the human side of how we convey this to our customers. People buy from people, rather than companies buy from companies. People buy from people.
I
So
agree.
some of that comes down to, how do you have this conversation with your customer? Your customer probably is just as in the dark and is inexperienced with this whole changing landscape of duties as well. So you can back yourself up with the data. That's key, like being able to justify it from a data point of view. But there's also a human behind that. So we got to think about, one, the technical side, and two, the whole psychology and how you even kind of approach those conversations with a customer. Because a lot of the times on this stuff, you might be in a contract with a customer. You might have a contract you need to fulfill. And you might have to have conversations where you may be put in a force majeure on this stuff, and break those contracts to be able to pass these tariffs on.
And pay whatever the penalty is, because that's cheaper than continuing to deliver on the contract.
Yeah, exactly.
Sure.
So it's great that we got the tools, and we have the solutions to pass these on to the customers and protect our own profits and everything else like that. But also we've got to be mindful of the human behind it and how we approach those conversations. They're going to be difficult. No one likes this at all. Apart from, I think, one person that I can think of that may be the instigator of all of this. They're always going to be very tough decisions, tough discussions to have. One, back it up with the data. Two, how do we even kind of convey this to a customer without sounding like we're a cowboy outfit trying to sell snake oil? And two, once we get an agreement in place with customers to be able to pass on those tariffs, then the technical teams can come in and implement solutions to be able to do that as smooth as possible. It's multifaceted on this stuff.
I really like the term data informed rather than data driven. It's not just about setting up the giant formula that's just going to make this happen, pass these costs on to your customers. That'd be data driven. But to me, it's mainly a reporting exercise, putting more information in the hands of human beings who then have to have those difficult conversations. It's a data informed exercise. And then there's always an element of gut feel to it as well, right? The data might be telling you to do one thing, but you don't want to mess up that customer relationship or whatever. You're going to just suck it up. It's really a decision made by the human, isn't it? And you're just searching for more information to inform you when you're making those important decisions.
Yeah, and work with your major customers on this stuff. Both pull in the same direction. I know that everyone wants to make money and make margin, essentially, not just make money, but make margin. But if you both are kind of fighting each other, then you're both going to lose. Like, it's fighting, how can we protect both of us? So don't try and bash your customer over the head with data, which is that data-driven approach. Data-informed is working with them with the data. Someone from years ago once told me, and I always remember it, he said, customers never argue with their own data. Which is very true. So if you can say, right, let's get together and look at your spend. Let's look at the profile of what you purchase from us in the volume. Take the money out of it. Look at the quantity and the products that they buy over 12 months. And then you can probably happily share, this is where I buy this product from. Maybe they already know. Take the money aspect out and go and look up the HTS website together. And go, well, here's the percentage. They're probably going to at least be more receptive if they realize this isn't like data that you've put together, hidden away, and you've kind of fiddled the numbers to justify your own argument. Work together to put the data in place so you both can trust it, and then that might help some of these difficult conversations. But it's not as easy.
Transparency always breeds trust, right? As long as there's nothing shady going on. But transparency, it's easy to say that, but it's another thing to execute it, because you have to be able to cobble together that data, right? It's and that all comes down to your systems, what you're tracking.
Make it collaborative. Say to the customer, right, come together, let's come to this meeting. You can come to me with, your last year's worth of volume that you've purchased from me. And they come to you and go, right, here's the data. I bought 1 million widgets last year. And you say, well, that those widgets are produced in China. Let's go and have a look. Look, here's the tariff code. Here it is in China. It's subject to 100%. Like, someone's going to have to pay the US government 100% duties. How can
that's why I love seeing those actual examples, like seeing that PDF file, seeing those bills that Neil blacked out for us, like to see it in black and white like that. It's very different than just watching it on the news, right? Which is kind of vague. You can't argue with it. And it hits you. Yeah. Well, I'll let you head off to bed. Thanks for staying on so long, and thanks for jumping on with some thoughts at the end. I appreciate it.
It's no worries. I perversely enjoy this kind of stuff. I don't know why. It's just sad data nerd that I am. But
well, I'm a fellow sad data nerd, so we're in this together. Hey, maybe I can have you on to do more stuff in the future, especially on the data side.
Yeah, definitely. It's I know that we've tried to meet up beforehand. We should really get you on the ABCs of
I bailed on the Saturday morning that we almost had at one point, but let's get it done.
We should definitely get together. Yeah, awesome. Sounds good.
Thanks, Peter. I'll catch you later.
Cool. Cheers, Tim. Bye.
See ya.